We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
Welcome back to the Capital Mindset Show, everyone. We are live with another show. So this time, all the audio worked, and I can hear myself, so I got to shut that off. But we have an esteemed guest returning here today, and you are, what is your name, sir? You guys might remember. Yeah. Some of them remember you. Some of them remember you for sure, back from the olden days. And all right, let me set up the chat thing so we can have it. All right, seems like it's working. Boom, there we go. Okay, so seems pre-recorded. This isn't a live. This was a live yesterday. So how are you guys doing, everyone? I hope you guys are doing great. We're going to have a conversation just basically going over some of the stuff we really like to talk about, okay? So some of the stuff regarding investing, what are we doing right now? So apparently, let me see, they can't hear you. Oh, that is right, because I turned off the desktop audio temporarily. So now they can hear you, Austin, please.
Hey,
there we go.
What's up, everyone?
There we go. I'm getting better,
guys.
What's going on? I'm getting better.
I've been here like talking. I love it.
I'm getting better at this.
I'm getting better live replay.
Yeah, this is the live replay. So, anyway, so you guys can definitely see, I guess, the live chats going on. Let me move this over here. Trying to organize myself. I should have been already organized, but again, I'm getting better, guys. Give me some slack. All right. So, first topic of conversation, Austin. How you been?
I've been pretty good. You know, I've been chilling, working. I got into music production in January, so that's been like where most of my free time has been going lately, into like learning how to produce music and all that. And I just really enjoy it. It's a good like pastime when I'm not doing work. But it kind of seems like, you know, the audience just wants us to kind of dispense with the pleasantries, Fabio, and just sort of jump right into this. They're asking for WED right now.
Warner Brothers Discovery.
Yeah, so I actually still own this stock because as most of y'all probably might remember from 2021 when I first started to invest, I bought like Corsair, I bought Zillow at the top, and just nearly like lost pretty much everything. But I bought Disca, and so I'm still actually holding WBD right now. So if how would you want to do this, Fabio?
Well, I mean,
should we do this like old times? Should I ask you what we're looking at here today, and then pull it open and
we'll pull it up.
And just say.
So let me actually. So you have a real time. This will actually help you out a lot because otherwise it's going to be. Let me see this. So I'll show you this. That should be better for you. Can you see that? Go on the Discord.
Not quite.
Discord.
Not quite yet.
Discord.
It's still loading for me.
Discord?
Yeah, I'm here.
Okay.
Yeah, it's
right.
doing like the spinning boxes thing.
Let me know once it's working. I'll get off of it and do it again because this way you don't have the delay that YouTube provides because that would be kind of annoying.
Oh, yeah.
How's this
actually
now?
Pull open a notepad too. That way I can actually ask intelligent questions.
Yeah. That should
Not
be
just
good.
like sitting here, just NPCing, not paying attention to anything at all. Yeah, it's showing me your wonderful brain logo right now.
Really? Okay, so let me stop
Yeah.
streaming again. This is annoying. Discord, come on, work with me so the host or he can see it. Can you see it now? If not,
nope. It's
all
just
right.
showing me the.
We're gonna have to settle.
Okay, I thankfully did not buy Voyager. It was after, you know, my investing foray of 2021.
Oh my gosh.
So I thankfully did not buy Voyager. So, you know, I'm not that bad at this. You know what I mean?
All right, so we're gonna pull up Warner Brothers Discovery. Let's see the SEC filings because they actually reported recently, right? And I think it was just like yesterday. I'm pretty sure. So I know that some of the key metrics we're gonna have to pay attention to, of course, is what is their subscriber growth. All right, that's one thing, very basic, but one thing, and we were gonna compare it probably to maybe something we'd think of another streaming play, maybe Disney. Maybe we look at Disney too. I don't know. Why not? I don't think there's anything inherently wrong with looking at Disney as well. All right, so let's first focus on or talk about the price action. So on just a preliminary look, you guys can't see this, so I'll just move you guys here. The PE ratio is sitting at 7.24, but we're going to explore that a little bit. Again, I was going to do a video on this weekend, but since you guys are asking now, we're going to take a quick look at it. And so the company is actually down 16.53%. If we see, do you see anything out of the ordinary in the earnings report that kind of stood out to you, Austin? If you look at it right now?
Oh, I can't really see it right now, so please continue, and I will ask
you
any
can
questions.
Pull it up on. You can pull it up on your computer too. Yeah, just look at it independently. I won't be able to see what you're seeing, but yeah, you can see the earnings report was just released yesterday. So I see that what happened was, okay, revenue grew by 221.2%, but that's misleading because of the merger. So anyone who fell for that, pay attention to that. But anyways, kind of looking at it on a guidance basis, I'm pretty sure they actually disappointed on guidance. Guidance wasn't as good as what people were expecting. We know that the company's saddled with a bunch of debt, so that's what we're coming to the table with. So that we have to kind of see if they have an answer to that. Yeah, we did see actually a drop in operating income, bigger than what was expected. All right, so we're going to let's see what they highlighted in their earnings presentation. I'm just going to skim through this really because we're doing this live. Well, pretty much how I do it in videos too. So they're trying to highlight the content pipeline, but yeah, we already know that. We already know this. That's nothing new. Okay, so this is something maybe to highlight to some people. We have recapture events in some of these. So for example, in theatrical releases, we have a recapture event. Streaming, we don't. So streaming is a bit different, how we're going to have to analyze the value of this. Licensing is going to be pretty nice. I mean, this is some of the stuff, a lot of this stuff is stuff that Netflix doesn't have, all right? But Warner Bros. Discovery does, and Netflix will try probably to move into some of these. I doubt they're going to get into really broadcast, but I think Netflix is definitely getting into theatrical releases at some point because you get that. Okay, so this is something, I actually have a question for you, Austin. Are you a current subscriber of HBO Max?
No, I am not.
Would you be interested in subscribing to HBO Max?
I would be interested. I'm just too lazy to sign up for it right now.
What about the free ad-supported streaming television?
It's free. That sounds nice.
That sounds nice, right? So for a lot of people, that's going to be a nice option. A lot of these, if you go back to the Netflix video, I actually compared, I forget which Netflix video it was, but it was one of them when I compared all the streaming services where I was heavily considering or doing some research on Netflix, and eventually that led to me buying a decent amount of Netflix in my portfolio. And so far, that's been a good decision, but we'll see how that pans out. But Warner Brothers Discovery and a bunch of other ones, they were showing us that they were having a different strategy for the same goal, getting subscribers onto the platform in whatever way possible. A streaming-based service with a freemium model seems to be where a lot of them are going, even Netflix. And Netflix really wanted to stay away from that. So how do you feel about that? I'm actually curious, Austin.
How do I feel about what? Because I've been looking here at the charting right now because I'm currently trying to figure out why they have so much in debt. And I was first taking a look at their capital structure and trying to ascertain if it was more equity heavy or debt heavy. But that's kind of a question I kind of want to throw back to you. Is all of that debt a result of this most recent merger that kind of went through? Because please remind me, I'm kind of out of the loop a little bit. It had something to do with AT&T spinning off Warner Brothers, and did they or did they not saddle it with the debt?
Yeah, they did.
Transaction.
They definitely did.
Okay.
So you'll probably notice how much debt they have. It's a monstrous amount.
Okay, so is that debt then being used to acquire more IPs?
No, that's debt that's already owed. That's already owed.
Okay. All right. Yeah. Cool. Okay, makes sense.
Yeah. So that's already.
So, yeah. Would you please repeat your question because I wasn't entirely paying attention because I was going through this trying to figure this out for myself.
Well, I'm saying, how do you feel about Netflix going into advertising as well?
Well, my personal subjective opinion, just right off the bat about it, is if I'm already paying $20 a month, I don't want to see ads while still paying for a subscription service. In fact, part of the reason why I pay for such subscription services is to get rid of ads. Now, I understand the whole cable argument too.
Yeah.
Where it's like, oh, like you pay for cable, therefore like you still have ads. But it's like still like Netflix hasn't always had ads, so to add ads into Netflix would just kind of be an interesting thing to just sort of wake up to. If that makes sense.
I want you to look at the screen right now. It should be up now. What do you think about this? This is such a random slide to kind of just. I mean, I know it's like fluffing themselves, but like just a random comment from IGN. Okay, the Apple
HBO Max, after barely 2 years in operation, has now emerged as TV's hottest streamer.
No, I know it's like
there are plenty.
We'll skip this because it's silly, but all right. So this is actually interesting though. When I saw this, so HBO Max, I mean, interesting but not interesting because Discovery Plus is more reality TV. So I'm not really surprised that it's a female skew, and then HBO Max is more of a male skew because between the two, I'm 100% HBO Max all the way. And we see that Discovery Plus, unscripted, that's like live TV, scripted, non-live TV, acted TV. Think Game of Thrones, the new Game of Thrones series that's coming out, or I think it's already out. I haven't really been interested in watching it because I feel like they destroyed Game of Thrones. So, but that's just me.
Honestly, if I could pipe in here, that was really interesting what they ended up doing with Game of Thrones. Being completely honest,
the House of Dragon, I think it's called.
No, they were going so well with everything that they were doing, and then I think it was season 8 rolls around, and then it was like they just gave up right at the very end of it all. Now I like understand the books like aren't finished, but I was just dissatisfied with the ending.
But
that's my opinion.
It just shows us that the writers who were in charge had no actual creative backbone. They were basically just going off of the book material, and the author, the original creator, he had all the creativity, go figure, and the writers just really didn't. But here's some of the franchises that HBO Max does have, and this is something I echoed in yesterday's stream. Stuff about Netflix and these other bigger companies. Well, bigger, not in market cap, but let's actually change the word. Older companies, these legacy companies, they have a lot of these franchises, yes, but I feel like a lot of them are squandered to a big degree. I think, for example, HBO or Warner Bros. Discovery, let me be clear, has squandered DC. I don't know if you want to chime in on that.
I was reading the comments. I'm sorry.
No, like on DC, how they've squandered it. What are your thoughts on that?
With the whole Zack Snyder thing going on?
No, like the whole all of DC, like Batman,
like how they haven't
Superman.
Really been like producing stellar content as of late.
I feel like they squandered
honestly, it. I would actually disagree with that because the characters of DC are just so iconic that pretty much at the moment, like a lot of the movies that have released, Batman versus Superman, etc., so forth, have been pretty bad, and people are still fans of Batman. People are still fans of Superman. I don't know. Like I actually think that like the hardcore fans of these franchises will still pay to see these movies. You just kind of need to up the creative backbone, as you just said, referring to Game of Thrones. They just sort of need to up that, and I actually think that like all the brand loyalty is still there with DC the same way it is with Star Wars and Disney. So it's you just have to like not be stupid and don't treat your fans like crap, and you'll be fine. That's at least the way that I see it.
Fair enough. I mean, some of the things that I'm trying to bring up someone's question. Let me just re-establish this connection here, and then I'm going to bring up your question because I saw an interesting question regarding this. So here's a question. With all that debt dilution in a liquidity crunch environment with a falling revenue, how likely is bankruptcy? Well, it all depends. The caveat here is it depends on what are the covenants for that debt and when is that debt maturing. So that would be something that we'd probably have to take a look at. But if they don't have if there's not like a big risk. So do you see the current portion of that long-term debt on there, Austin, by chance? We'll find it anyways after this, but I'm just scrolling through this to see if there's anything else interesting.
Oh, there's a solid delay between my screen and yours. I'm writing down that question.
No.
I want to actually snoop through that later.
Yeah, that's what I'm saying.
That's a great question.
If you have it up in front of you, the 10Q, sorry, we would I think they reported a quarter, not an annual. And you could probably find it in there, just current portion.
Current portion of long-term debt.
Yeah, just to see what's in the... Trying to see anything here. So pro forma just said EBITDA.
Okay.
Yeah, it's okay. So
the current portion of debt is about 1.09 billion as of June 30th, 2022.
doesn't seem like on the surface it doesn't seem like a big deal. But
they're rocking these accrued liabilities of over 10 billion in their current liabilities. Now, I don't know what the constituency of accrued liabilities is in this instance.
Are you looking at an aggregated source?
Yeah, I'm looking here like right at the 10Q.
Okay. No, but okay. So they just lumped. Okay, I see what you mean.
Yeah.
There's no footnotes. Maybe explaining.
Let me actually try to find those for a second, because that's a high number.
Yeah.
So I just gotta.
Well, how much do they have in current assets? I mean, we can check out like some current ratios. To do some analysis there. Let's see here. Well, I mean, okay, so I'm pretty much done with this presentation. There's not really... Okay, pro forma revenue, we saw a bit of a decline quarter over quarter. Pro forma adjusted EBITDA, this is the big decline. This is what analysts were really harping on about. Reported free cash flow. Okay, so free cash flow's up. But the thing is, this is, I think, because they were highlighting up here. Where is it? Operating expenses. Yeah, right here. Operating expenses rose 16% versus prior year quarter. Cost of revenue up 33% due to programming. So they're investing a decent amount in that. Sales, general, administrative, 10% due to lower marketing spend. So they save money on this, but all this other stuff in general, cost of revenue, this part in particular, caused this 16% bump. And then we saw this drop in EBITDA. Yeah, so that's pretty much covering that. So let's go to and SEC file.
The accrued liabilities, it looks like it's production costs, content rights, payroll, all that kind of stuff. Okay, so that pretty much answers the question from earlier about why that number was so high.
I don't want that one. Which one's this one?
So
I hate when they don't have this option. Yeah, this is the one I want. Let me close out of this. I hate that one. And I hate you too. This file, stupid file. All right, so let's take a look at this. So they break down the revenues here: advertising, distribution, content, other. We saw these in the investor presentation. You can see that their largest one is distribution in terms of sales or revenue. So 6-month period, 6 point. Okay, and quarter over quarter. I mean, remember, this growth is really weird to compare because this is now the new entity. This is the old entity, so it's not really a good comparison. Let's see here. Again, a lot of these numbers we have to look almost in isolation, but we waited for these numbers now. Where is the balance sheet? Let me go here.
You, good sir, will have to go onto looks like page 6. You'll have to go to page 6.
Page 6? Oh, thank you. You saved me some time. I was like looking through. I was like, where's the hyperlink? Okay, so we have the balance sheet here. We have cash equivalents, receivables, prepaid. Okay, so total current assets at 15 billion. Again, really weird to compare it to last year, but let's look at it in isolation. Let's see here. Current portion of debt. Yeah, you see, that's not a big concern, but I want to actually highlight non-current portion of debt is 51 billion. So this is monstrous for the size of this company. Let's remind everyone how big this company is. So right now, the market cap is sitting at 35.41 billion. So just on the surface, we're looking at a company that has more debt than what the entire value of the business is. So, obviously on the enterprise value, it's not too far off Warner Brothers when they went, when they merged with AT&T. I believe, if my memory serves me correct, well, actually, no point in, when we have access to the internet, there's no point in just guesstimating. So, Brothers, AT&T acquisition, and I can get you that price, because I think I remember it being close to that enterprise value, or very close to where it is now. Yeah, I know the spinoff was 43 billion. I want the merger. Let's see. 85. Okay, so I was right. So it was $85.4 billion, and that's where I remembered it. So it's pretty close to the enterprise value. Around when the spinoff happened. Now it's a little bit lower. I believe the enterprise value is there. But anyways, looking at this, we'd have to actually try to find out, or not try to see where is all this maturing. That would be something that I'd probably highlight maybe in the video focused on Warner Brothers Discovery, because that's a bit of a concern. And then management has a plan set forward, but the question is, will they get through it? So.
Well, I mean, also too, I have to ask the question too, like, what is management's plan forward here? If you could just briefly run through that for a quick second. And then
we have an excellent question from a super chat, and I think this is a journey that you experienced as well. So I think I'm gonna get to that as soon as we finish this. So I see your question, Kip Fleming, PhD. Do you have a PhD, Kip Fleming? It's always interesting. But yeah, we have also some people who are answering your question without us getting to it, but we'll answer your question too. Don't worry. So what was your statement, Austin?
Basically, what was management's plan to really kind of pay down this debt?
So I believe
what's management's plan moving forward? That's basically the question here.
I believe they had a content spend plan of like close to 20-something billion dollars, something crazy like that. And they said that they were going to generate cash flows in excess of that, and that was going to be basically paying down the debt, but that they were going to invest heavily in content and they weren't going to slow down in effort to grow. I can tell you that plan will probably change if they see the environment change as well. If they believe that.
Yeah, because I was about to ask. The enemy always has a vote in this instance here, and it almost kind of seems like they're completing this merger right at the moment where all these other streaming services are now cropping up around the market, basically.
Yeah.
So it's sort of what are they doing? Have they indicated any instance by which they're seeking to diversify themselves other than the obvious, which is the IPs they currently own in this instance?
Well, by the way, I just want to actually point this out because I know that they were going to talk about it. I just want to talk about the debt real quick. But their IPs, what was your question about IPs? So I don't forget it.
My question is, what are they going to do to differentiate themselves from Netflix, from Disney Plus, all of these, other than the obvious, which is the IPs that they own that they can take advantage of?
Well, I mean,
have they indicated that they're going to be doing anything?
No, I mean, like
maybe investing into their own shows, stuff like that.
Well, that's all they can do. It's just the IPs. They have to develop the IPs. So I know that they're trying to implement a 10-year DC plan. DC as in, they're superheroes, so the competition to Marvel. We'll see how that pans out, but if they looked at the success of Marvel and they're like, okay, we have to try to get that. We'll see if they actually succeed. That's a whole separate, question whether or not they do or do not. But yeah, this is actually the slide where they actually break down the debt structure. So we do see at a greater than 10-year is the majority of their debt, which is good to see. That makes me feel a little bit fuzzier inside. 29% is under 3 years. That's going to be a bit of a concern if they're having to refinance that at higher interest rates. So, a bit of a concern there. And I mean, I guess you could say, let's do that quick maths there and use this calculator. So if we have $53 billion in debt and we take only about a third, so 0.29 to be exact, that's $15.37 billion in debt. I think they're going to have to roll over that. I think if they continue the content spend, whatever's left over, there's not going to be enough to pay it off. So they're definitely going to have to refinance. I think it's unrealistic. And maybe they get the chance if yields actually do end up coming down again because of other happenings going on in the market. But yeah, we'll see how that pans out because, I mean, that they could get lucky in that sense. But a lot of their debt we know is due within that 3 to or greater years. Okay, so that's a positive. So more than 70% positive, to be exact, 71. So let's see this. And what I like about the debt structure is that the majority, 87%, is on a fixed basis, and the average cost of debt is 4.3. I actually really like that they make that super easy for us to see. So, I know the reason why they're showing this here is that one of the biggest concerns by investors right now when they're looking at this company, if they're thinking, right, is to look at the debt pile and say, okay, well, this is a point of concern. And it's a good thing we're actually covering this because I was going to maybe talk about this in greater detail on the video, but since we're covering it here, I mean, just looking at it now, I'd say that
as well, dude. The world's our oyster right now.
Exactly. We can have fun. This is a fun live stream. We can get to REITs later because I think I want to talk about REITs. Bank also some industrials, too. Bank stocks. Oh my gosh, we're gonna have fun. All right,
dude. There's so much.
Should we get a Guinness?
I know.
Should we get a Guinness?
Oh, sadly not. I'm at my grandmother's place, so
Okay.
yeah, I can't.
You're
Yeah.
okay. You're tuning in from there. Yeah, you can't
Yeah.
get plastered
Yep.
with grandma.
No, that's not happening. So
All right. So yeah, you guys were wondering why you can't see Austin's beautiful face. So we're just getting audio,
Yeah.
Austin. All right.
Yep.
So, all right. Basically, that's interesting. Okay. So what else do I want to actually see? And then we're gonna get to the question because I actually want to then answer our question here. Oh gosh, this is so zoomed in. What is going on? All right. Well, this is on a quarterly basis, but all in all, I mean, we see that they're generating positive cash flows, but let's see what they're reconciling here that really gets them. Okay, so any anomalies that stand out. Because the net income going down, that could be from one-time event. I think that's from one-time events, if I remembered. Contents rates amortized and impaired. Say lots of amortization, lots of depreciation going on. I mean, okay, granted off of a larger asset base. Let's see there, gain on disposition. I mean, aside from film, television, content rights, games, and payables net, yeah, but all that's coming over. It's just a larger size. Like that's not really a big deal. What's interesting is as a larger size, they're generating about the same cash flows, which is, yeah. I mean, like it's an increase of about 200 million, but that's what I'm saying. So a lot of these line items, they're much larger because it's off of a larger base. But if you look at that last line item, cash provided by operating activities, it's just really hasn't grown that much, even though it's a larger base. So on a percentage basis, I mean, it's actually an okay growth, but yeah, I don't. Yeah, so it's not.
Is this sort of like a wait and see type of?
No.
situation here?
It's just like wasn't. Maybe people were expecting like something crazy out of it, but not really. So yeah, on a net income basis, again, that's probably more in line with some one-time events, but yeah. Okay, so what I'm gonna think is I'm gonna actually have to take a look more at this company. I mean, I already said that I prefer Netflix over this, but I think the audience prefers Warner Bros. Discovery over Netflix. Like that's usually was the comments I got on the Netflix videos that they.
That's really interesting, actually. I hate to kind of interrupt you there for a second, but why? What are some of the reasons?
I don't know. This is where I
for
say,
that?
hey, chat. As I say to the streamers, hey, chat. Why do you guys like? I'm assuming the question. You see, why do you guys like Warner Brothers Discovery more? And anyone watching after the fact, you can also answer this question. I'll respond to you in the comments afterwards. I spent a good portion of today responding to the comments from yesterday's video, which, by the way, I got copyrighted, so I didn't make a dime on it. So, yeah, it was the intro countdown song that did it. So that couple seconds of mute sound copyrighted or took the revenue of the entire video, which, I mean, let's face it, wasn't much. So they can enjoy their couple dollars. All right, so we do have a question here that I want to get to. Max characters, I'll paste my question below, and then we'll get to his question. So the question here, right here. So accounting is the accumulation of the financial information, and finance is the interpretation of the information. If true, is it wiser to learn accounting before analyzing individual stocks? Okay, I'll let Austin answer first, and then I'll answer.
I would actually say that accounting really gives you, how do I say this? Basically, it gives you the building blocks by which finance can be born from, if that makes sense. So if you understand accounting and you understand how the financial statements are structured and you understand what each line item means, then it doesn't make it easier, but it provides more color and it gives you more clarity when looking at things from an investing perspective. At least that's my opinion with this. What's yours, Fabio? What do you think about this?
I mean, the way I kind of describe it is that, this is what we used to say back in the videos, right? Was accounting is kind of the reading the building of the financial statements, understanding the different components that go into it, and it's usually looking at the past. And then finance is the art of interpreting meaning from the financial statements. Like you don't necessarily need to understand every single input that goes into the financial statement or where things kind of come from, but you're able to read it at least, and then from there derive some sort of story or future. So it's like telling the story. So I like to say the accountants write the book, and finance is what reads the book and tries to give out into the future. So an accountant can be good at finance. A guy in finance can be good in accounting, but it tends to be, if you're talking from like an academic perspective, accounting is a more difficult degree than finance for sure.
Oh yeah,
much more difficult degree.
Oh yeah,
but
I remember intermediate too.
yeah, that was. Anyways, so hopefully that answers your question. You can ask a follow-up question if there was one part you want us to touch on a little bit more, Kip, and we'll be happy to answer that.
Well, what I also find interesting about this question too is it sort of what like actually Dan Weston here says in the chat. Accounting lets you understand the story of what the numbers represent, and it's true, because what I noticed is that like as you were saying, and correct me if I'm wrong here, what you had said is like you don't need to understand every single line item, but what accounting allows you to do is that when you finally see a line item that seems suspicious, because of your knowledge of accounting, that will point you in the right direction onto how you can basically derive that story from what you're looking at in, as our wonderful friend Jeremy likes to say, the balance sheets,
Yeah.
So.
I mean, yeah, I don't know if you ever misspoke on that, but yeah. All right. So as a finance professional, you see here we have a comment here. As a finance professional, basic accounting knowledge is a must. Yeah, absolutely. To do proper financial analysis. But, I would ask you the second or follow-up question to that. So do you think you need to be necessarily, for example, an accountant? So a lot of finance professionals are not accountants, right? But it is that a lot of accountants can transition into the finance space, or because there is a lot of overlap, obviously, right? Obviously, there's a lot of overlap. One of the actual CPA exams is a basic finance exam, right? Or with varying degrees, I think, of difficulty. Some people think it's really hard. Some people don't think it's hard at all. So what I'm talking about, BEC. But if you have a follow-up question to that and you want us to kind of delve a little bit deeper, we can definitely do that. All right. Okay, so someone said something funny. Matthias said something, because I bought into it at 74 and they're getting bought at 60. Oh, this is someone else. This is for something else. This is definitely not for Warner Bros. Discovery. I'm like, what?
No. I think they're talking about Irobot there.
Oh, Irobot.
Oh, no. But I don't know for certain, because the same person wrote something about Irobot ruined my Friday.
They are, because I have a decent enough memory to remember that they were talking about this in the Discord. Here's.
Okay.
So Irobot, the company that makes the vacuum cleaners, I actually have one.
Same here, actually.
Yeah.
I do too. Nito.
They're a must. They're not a must, but I like them. So one thing that is interesting about this acquisition, and Amazon is making a big push into robotics for sure. So it kind of makes sense as a tuck-in acquisition for Amazon, for them to kind of expand into this. Also this has been speculated for some time. I remember back in 2017, people were saying that Amazon should buy Irobot. It's so funny that it's happening now in 2022. So good for you guys, whoever owned Irobot. I think they actually did save the company. So Irobot definitely will do better inside of Amazon than Irobot by itself. I think that Irobot selling through the Amazon platform, now that they are owned by Amazon, is going to do much better. And then coupled with Amazon's proprietary technology and techniques in robotics, I think that Irobot can do wonderful things in the amount of R&D spend that they're going to probably get. Well, they're going to be merged in with the robotics division anyway. So Irobot also had a decent amount of data regarding, for example, homes. Like that's something that a lot of people have been talking about for quite some time, that the company can leverage. So Amazon, of course, wants to get to know more and more about your house. Believe it or not, guys, believe it or not. So hold on, let me actually correct this again, because this widget is kind of finicky. Sometimes it goes out of sync, and I don't know why. And sometimes it behaves the whole live stream. So if you have any thoughts to share, Austin, now's your chance to fill in while I reconnect the widget.
Oh, right now at the present moment, I'm actually kind of going through the
There we go.
Irobot 10Q. I'm just more or less curious to see what this company looks like in terms of the balance sheets. So yeah, that's what I'm doing right now.
So Think to Invest comes out and says Warner Brothers seems like more versatile, better content, room to grow, has an underdog vibe, emotionally seems like the next Netflix, emphasis on emotionally. Any opinions, anyone? So anyone, by the way, in the comments, you can share your opinions, but that I guess goes to us.
Let me actually ask this for clarity.
Yeah.
What does emotionally seeming like the next Netflix mean? I don't mean that to be offensive, and I mean that with respect. Like I
think I know
I'm
what
not
it means,
entirely too sure what that means. So if you would elaborate on what you kind of mean by that, that would really help. Because what I think
just
you
means
might
feels.
be saying with it, yeah, is like because of the underdog vibe that like Warner Brothers currently has, that's sort of basically like causing people to sort of root for the company to become the next Netflix. But I'm not entirely too sure what you mean there. So.
Oh yeah. Oh, I don't do this often, but I'm gonna do it now. Hey guys, that smash the like button. Smash the like button. Let's hit it up. Let's hit it up. All right. There was a funny question. So they're like, who is this guy? This guy has a very interesting story. Pebble Man. If you go back to early 2021 videos, you'll see this guy.
Oh yeah.
This is not. Someone's asking, yeah. Is this Seth? What? He doesn't even sound like Seth.
How dare you? How dare you?
Sounds like Seth. How does he sound like Seth?
How dare you? That's so offensive.
Oh dang. Okay,
How dare you?
You're gonna rip on Seth now. Noam, by the way, Noam, you wanna hop on? You definitely can. By the way, buddy.
Yeah. You're also welcome.
Heck yeah, man.
I haven't seen you in a minute, bro.
Yeah, it's been a long time. We need to all see each other. We need to go out for lunch or something. Well, Noam and I can't, but like. It's the thought that
after you know.
It's the thought that counts.
All this stuff going on.
Yeah,
it is.
It's the thought that counts. Like I'll text you. I'll say, hey, I would like to go to lunch with you, and you'll be like, oh, same here.
Oh, he's grabbing his laptop.
Oh
That's
yeah,
what I like
but Noam, get some like headphones or something so the audio can be a little bit clear because I don't want like like an audio.
It's just echoing. It's like feedbacking into his microphone.
It's like, hey. What's up, guys?
Yeah.
All right,
Fabio. So,
yeah.
Hold on. Do you have any like final things to say about Warner Brothers, or because
No.
I was wondering if we could start to move on to some lovely REITs.
Oh,
you know,
100%. All right, so let me finish off with Warner Brothers. I think yes, they have a great content library. All those things are true. I just think that a lot of these legacy companies, they just have a lot of bloat. That's how I kind of think about it, if I'm being honest. It's not a tangible thing that we can kind of put to. It's kind of like how investing can be in both like an art and a science. So it's like, and why would you want to own something if you don't necessarily feel, and I don't necessarily feel that way fully with Warner Bros. Discovery, by the way. I feel like that more with Disney. But with Warner Bros. Discovery, I don't know. I'd have to really sit down and really think about it before I build out a position. And if I decide I don't really want to build that position, I just might exit the position entirely. And I'll take the whatever small loss it is. But yeah.
Yeah.
All right.
Well, I mean, I still own shares in this, but it's such a small percentage of my portfolio now since I just moved back to index funds. So this is like kind of a spec play, but also not spec play, like, but also is a spec play.
You know who will be proud from you saying that?
Who will be proud?
Well, you got, I don't know, Strongman. You got Investing with Cole. All these guys will be proud of you saying that.
About the index funds.
Yes.
All the index funds. Yeah.
Which we'll take the time to out of our day to say that is what the vast majority of people should do. By the way.
I mean, if I can for just a quick second.
Oh yes, you can.
In 2020, well, before like I was just rocking with index funds. And then in 2021, I got kind of swept away in like the bull market hype. And I was like, oh yeah, like I can, you know, like I understand numbers, which first of all was arrogant and very foolish of me to say that. So I start like going on YouTube and I find, you know, Jeremy, and he's telling me about like Corsair, Myorsair, and you know, like all these like great stocks. I did not like Tattooed Chef. I thought Tattooed Chef was stupid, but Corsair, like his bull thesis, it made sense to me. And because I'd seen how much like booming in 2020 and all this other kind of stuff, I was basically like, all right, yeah, like I'm gonna invest in this. So then I bought Zillow as well, but I bought it
Oh
at like
God, I'm cringing. Sorry.
all of this money. And then I basically realized, like, okay, first of all, I don't like, as much as I'd like to sit here and posture like I know what I'm doing, like I really don't. So I'm just gonna kind of stick with index funds until such time that like I actually have enough knowledge to sort of pick some of these stocks so I don't have a repeat of 2021 all over again. And so yeah, that's I know. I think I see you cringing in the delay of the camera right now.
Yeah.
Oh, hey, Gnome. What's up, dude?
Check your audio, man. All right, coming back. Let's see.
So, we were talking about Warner Brothers Discovery and what Luis
can you
said
hear him?
here,
I can't
and
hear
then we
him.
were gonna move to REITs. What, Gnome?
Yeah, I can't hear him.
No, Gnome isn't speaking.
Oh, okay. Well, one thing before we finish, I want to actually go over Luis, because I don't know if you saw my video, Luis, because that's actually something that I talk about. So I just want to highlight your comment because they absolutely agree with you. And by the way, we have a question about you for index funds. Which one do you think is best? But we have Luis Alberto saying, I don't think having a huge content library is a strong competitive advantage in the industry. People want new content all the time. So either you watched my video or we just have the same wavelength of thinking. So yes, I absolutely agree with this. Everyone, yes, he's right. Because you see how much they're continuing to spend on content, that it's not slowing down. So, how many times are you going to see the old Disney movies over and over and over again, right? Until you're like, I want the next thing. I want the next thing. So it's not something that really ends at some point. There's just a point of scale that they're all trying to reach. All right. So, what's your favorite index fund, Austin?
VOOV. VOOV.
VOOV?
Just being honest. Yeah, VOOV. I like VOOV. Vanguard Utilities Index Fund. I like that one too.
What?
Yeah, I do.
You're in the value index one. So why do you like this one? Okay, hold on. That's out of left field for me.
But the Utilities Index Fund, I'm not even gonna lie to you. I've been buying it forever, and I'm just gonna keep buying it. I know it sounds rather stupid, but at the same time, it is an index fund. So I'm kind of like, eh.
Well, not all index funds are created the same.
I know. But, I don't really think I'm going to stop buying it anytime soon. So
Okay. Fair enough. But would have okay, so actually, let's see this one. Because I would probably argue that the VOOV one is probably going to be a bit of a waste, especially for. I don't think that's my opinion. I don't think that one's good. But I would say
let me actually
VOOV would probably be better.
Back on you then.
Yeah, I'll say it.
Okay, so other than VOOV, what are some of your favorite index funds, and then why? What's your thought process behind it? Because I mean, to me, I'm just going to be honest. I'm probably like 99% of people that see an index fund, low expense ratio, and then Vanguard equals buy.
But then why wouldn't you get VOOV? VOOV's low expense ratio Vanguard.
Well, I mean, like
or
also
VTI.
too. Yeah, I'm kind of in my process of just how I kind of used to do things. So I'm not saying I wouldn't buy VOOV. I'd probably go out and buy VOOV.
Wait,
right now.
I gotta pull up Don's comment. Oh no, it's not showing it. For some reason, this widget sometimes doesn't have a comment, but Don said Fabio's about to kick Austin. I disapprove. Get out! Get out!
Oh yeah.
Oh
yeah.
You should do. You actually no, guys. Unironically, you should 100% have half in VOO, and then the other half in VTI. Do you know why that's ironic?
Why is that?
Because VTI includes VOO. So you're just increasing allocation. So you're basically just getting it's weird. It's weird to do that, to just kind of, you're basically just changing up the allocation at the end of the day. So yeah, but VTI is total US stock market. VOO is just the S&P 500. SPY is another one. But I don't think personally the VOOV one is I don't know. Like, what's your thesis? Why VOOV? Explain it to me.
It's literally just because low expense ratio and Vanguard.
I swear.
That's literally just my logic with it. Yeah, I know. You can kick me out of Capital Mindset. It's fun.
Get out.
No, I'm literally I'm not capping, and I'm not ashamed. That is literally the reason why.
Why? So, well, past performance is indicative of future performance, but you understand like what goes into that fund, right? VOOV. It's the value index, by the way. It's the value index.
Yeah, tell me. True. Okay.
Yeah, VOOV is I'm pretty sure VOOV is the value one. Let me actually find out. So, VOOV, if I remember correctly, is the value. Yeah, S&P 500 value index fund ETF. So, I mean, this one's, okay, so like 5-year performance has been 38%. So I know that's underperformed. So if we go VOOV, but it's because of what's in there. So in there, you have basically a lot of mature companies, and they're not going to be growing at the same rate as some of the other companies that are, up and coming in the S&P 500. Because the S&P 500 has that natural filtration process, or that corrective process, because it's market cap weighted, which we talked about in the past. But not Austin.
Guys, I may or may not be trolling all of you right now.
If you better be trolling me. You better have been trolling me the entire time, because the way you were saying it was like, I pick it because Vanguard and low expense ratio. I was like, oh. It's gotta be.
Yeah.
I
I may or may not be trolling, and I will leave it at that. And so, would you like to talk about REITs now, Fabio?
Well, speaking of REITs, we have the VNQ.
True.
Right, VNQ.
That is true.
So let's talk about the index first. But this is the VNQ, so this represents all of it. This is the Vanguard Real Estate Index Fund, ETF. And typically, when you use a REIT, you might be comparing it to this. But yeah, not Austin. Austin has an ETF that is all 8 pillars. Wow, you got to share this with us.
Oh yeah. No. That's actually why I bought VOOV. There's three reasons now. Vanguard, low expense ratio, and all the stocks satisfied the 8 pillars.
Okay, no. MGC. I've actually, let me see. MGC stock. Vanguard mega cap. Okay, so basically it's just, how has the strategy performed? Okay, the strategy over the past 5 years has actually outperformed the market. Let's actually compare it over, well, I don't know if it's the same comparison. 2007, yeah, I think VOO, I don't know if VOO is, yeah. So we can't compare it in that way, but yeah, definitely in the 5 years, it has actually slightly outperformed. You can see that there. But anyways, going back to this is VNQ. So what are some of the REITs you want to talk about? I guess we'll start with that. And by the way, audience, you guys can spit some out. But yeah, some people are saying VOO all the way, by the way.
See, Bacon Memes gets it. VOOV is just misunderstood.
Yeah, VOOV is just misunderstood. NETL. All right, we got a bite. NETL.
Oh yeah.
All right, so NETL. Let's check this one out. All right, so Net Lease Corporation Real Estate. Oh, this is an ETF. This is another one that someone's pointing out. Let's see. Wait, how has it done over the past 5 years? Okay, but 5 years for this. I mean, you've gone through the pandemic here, so like I think even VNQ hasn't done too hot. Oh, wrong one. Where'd I put VNQ? Yeah, VNQ over the past 5 years. How have you done? Okay, VNQ has done better, but it hasn't underperformed the broader index. So yeah. Yeah, this is not even comparable to that, too. I mean, obviously, with here, you have the great financial crisis. So, but yeah, that's another one.
This is actually a great question here, too.
What?
Sorry to cut you off there.
No, cut me off.
Zuni says update on MPW, and that's actually one of the REITs I kind of wanted to talk about.
Oh,
honestly,
yeah,
I would.
Wrong one. What is this? I just pulled up a random stock.
Oh, MPW. Yeah. There you go.
Oh, in Austin for you, no, it does not. That's a key point. No, it does not. So yeah, it just includes capital appreciation. There are some charts that show total return, but Google on this quick glance that we're doing, no, it does not. Okay, so that's important for looking at VNQ. I think that's why he's asking. All right, so taking a look at MPW, this is a company that we added to recently. We got very lucky with the timing on it so far, but not like to brag about because it's such a small part of the portfolio. So, but yeah, it's something that it's one of them that I would probably be adding to if it got lower, probably below my cost basis right now, because this is one that I want a decent margin of safety personally. But this has reached very interesting yields in the past, and basically,
let me kind of ask you there, and then you
go for
your thought. What's the reason behind why you would like such a decent margin of safety with this particular company? Does this sort of fall into the realm of sort of like not exactly the textbook black and white 15% on the model type of margin of safety, or is there like a specific, more subtle and nuanced reason why you want a greater margin of safety on MPW?
No, it's the real estate type. So people think that maybe all real estate should trade equally to the same multiple. Not true. So depending on what real estate you're actually looking at in the commercial space, there's going to be different cap rates, and that's. Well, the market's not stupid. There's reasons for why the cap rates are different. So properties are like pretty adoptable. So different tenants, you can just plug and play with different tenants. Those are going to be pretty valuable, especially if they're in a good location, right? But let's just talk about the property type. So if it's a property type that you can stick in, I don't know, like a Walgreens, a clinic, a restaurant, like anything like that, those are going to be really valuable. And then on top of that, they're in a great location. So think of like the standard, commercial properties. Recently, that there has been like this craze with industrial properties. So even in the greater Central Florida area, there's a place called the Valley of Dreams because of its location. It's so central and pivotal to a lot of the way goods are transported in the state of Florida. So that whole area has been developed massively by Walmart, Amazon. So they have these industrial REITs that have been expanding massively over the past decade. And of course, something that they're kind of going to get exposed to is slowdown in the economy, overbuilding. So that's also always a problem with real estate is overbuilding of a certain property type. But some
so let's actually break that down for a quick second. When you say overbuilding of a certain property type, what are the ramifications of overbuilding in and of itself? Does that just cause like competitive crowding? Does this cause like companies to? Does it basically make it harder for companies to acquire capital? Like what are some of like the ramifications of what you just said there in this instance?
So yeah, pretty much it's as simple as like kind of like a supply demand dynamic. So if you build too much of a property, well, within a given area, because not all areas are created equal. So if you build too much of like let's say a warehouse, and the warehouse is all these overbuilt warehouses are, let's say, in a different state, that doesn't obviously affect the state that you're in, right? It's within your locality if you overbuild. So, but within your locality, within your market, let's use that phrasing. Within your own market, if you overbuild a specific property type, you're going to have a bit of weakness on that demand because you overbuilt. So there's too much competition. Your tenants start to get the leverage in this case because they can say, okay, if you don't give me, this rent,
favorable,
I'll just go here.
I'm going to leave. Yeah.
Because there's like one down the street that will take it for less, and there's options, and there's not enough of me. So you overbuilt relative to the tenant demand. So if there's not enough tenants. And these properties, MPW, it's like a double-edged sword. This is always how I describe this one and something like Vici Properties. But the issue or the benefit with something like MPW or Vici Properties, and we'll get to Vici in a second, I guess that's the second REIT we can talk about, is that you're not going to really be able to build many hospitals next to each other. First of all, that's not even, so people who don't know how the health system kind of works in the United States, it's very bureaucratic. Even to build a hospital takes a lot of work, not just labor.
Like a board of doctors have to approve
not doctors.
The building of...
Not doctors, but basically let's call it a local council, so we can keep it simple. But a local council basically approves the construction of the space, and then they can build this hospital. It's supposed to serve a strategic purpose or a benefit to the community of some sort. But anyways, we're getting ahead of ourselves there. So this hospital, you can build it there, and you can't just build one right across the street. You can't just build one right next to it. Okay, so you have this hospital that serves this area, and you own it, and so you have a tenant, right? So your risk is basically this tenant. And there is a tenant that we have talked about in the past. I'll actually pull up their stock, HCA stock. So this is them. This is one of the largest operators in the United States. And this is actually a company that if you didn't know existed, you should know exists. And it's funny because we liked it. We talked about it favorably and had this nice pop here. So we kind of missed out on whatever this gain is. But anyways, now if you didn't know it exists, now you know it exists. And so if you wanted to own a hospital operator, here you go. But anyways, not an endorsement or anything, just letting you know that it exists. And so when MPW was starting to see some weakness, it was actually starting because of weakness this company was having because of labor shortages and because of a bunch of other issues going on with labor costs. Labor costs were rising and harming the margins of HCA. HCA being such a large tenant of a lot of these hospital operators is a bit of a problem. So where were we going with this? Oh, we're talking about double-edged sword. So your tenants can't really move out, but also if they go BK, what happens? Well, it's very difficult for you to find a new tenant.
Yeah. Yeah, especially because you're dealing with hospitals. And
Yeah.
like you just said, it's very bureaucratic, hard for hospitals to start, et cetera, so forth.
Yeah.
Okay.
Okay, so...
No, go.
No, I was going to just take us here, but you go.
Okay. I was basically going to ask if we could kind of actually look deeper into some industrial REITs and if we could actually move on to Stag. If there's been like any updates to Stag, anything that you think that like we should kind of take a look at in terms of Stag, or honestly for industrial REITs as a whole, if you want to just sort of elaborate more on what you were talking about earlier with sort of this surge in industrial REITs, at least in Orlando, I'm sure, in other parts of the United States.
Well, yeah, everywhere. But Stag is the one I think people kind of flock to for some reason, especially because it's a monthly paying dividend stock. And it yields pretty high typically. I think it's for a long time yielded close to 5%. At one point, it was yielding pretty low during the recovery of the pandemic, so to speak. So during the liquidity boom, this company or a lot of these industrial stocks really followed the video content that we were producing back at the end, and with the liquidity crunch and all that. And so a lot of the industrial stocks, a lot of REITs follow that, but not all REITs. So, but Stag Industrial wouldn't be it's not the strongest player. If you, for example, you're looking like for the leader, it's PLD, so Prologis. And so Prologis market cap, you can see at 97.26 billion. Let's refresh Stag Industrial to show you the size difference, 5.87. So in REITs, size does matter. Yes, have fun about it. So size does matter. You can have your jokes. But let's see. Oh, who's this? Someone. Okay, that's different. Okay, so kind of going off of Prologis or thinking about Prologis, what are the benefits of being the larger REIT in a space? Well, it's the ability to raise capital. That's going to be your main benefit or your primary benefit. You're going to have better access to deals in some cases, but you are. Let's say you overgrow. This is the caveat or the asterisk on what I'm saying here is if you do overgrow or you over leverage yourself, you'll get effed, so to speak. All right, sorry, I'm reading this on the side. You guys are.
Can we kind of, what do you think, if you don't already know, what do you think the capital structure of Stag is going to look like in this instance here? I would believe that what we would want to see with a REIT would be actually more dilution in this instance, because correct me if I'm wrong and if my logic serves me correctly here, more debt means in a higher interest rate environment, it will raise the cost to borrow, therefore posing more of sort of a leverage risk for these companies. So actually a little bit of dilution is a good thing as long as these properties are bringing in more than what the company's currently diluting for. Did I say that correctly?
I think so. I think you asked something in there correctly.
Yeah, I was basically asking what the capital structure of Stag looks like, because there's a reason why everyone's flocking to it, and I don't think it's hype. Let me actually take a look at it right now.
Well, I was going to pull it up too. So I think when I looked at Stag, they have I don't know if they're using mainly equity. I'm pretty sure it's mostly equity. But with Stag Industrial or with REITs in general, it's actually, the answer to your question is no, it depends. So if a lot of their rates are fixed on property, that's not necessarily a bad thing if it's a lot of debt. That would also mean that they're not going to be as dilutive, so it could also be pretty good, because if the debt is fixed, then assuming all else being equal, you're raising your rents each year, you're going to see that accretion that way. It all really just depends on how they're able to mix out their capital raising so that the cost of capital is getting lower than that cap rate, so that they can acquire new properties at lower than cost of capital. So... at higher than cost of capital. So I was thinking the reverse. But yeah, Stag Industrial, I think, also manages properties because they have this asset management division. There you go. There's that word, guys, for you guys out there. Asset management.
Asset management.
Yeah. So Stag Industrial here offers, let me actually show everyone so visual learners out there. So Stag Industrial offers industrial real estate operations platform capable of addressing every physical aspect of a tenant scenario related to real estate ownership. So this is exactly that. So basically they also will manage the properties on your behalf and generate that fees. So, all well and good. So let's go to, you can see this or the properties if you didn't know, by the way. All right, so let's see here. Let me see how much the exposure they have to Florida, because I'm actually curious. Only 16 buildings. How much in California? California. I'm just kidding. All right, so let's see here. Why don't you just their website's not that good because I would like to hover and see it. So basically California and Florida is pretty much the same size. Texas, huge exposure. I think they're from Texas, if I remember correctly. Okay, so let's go to investor relations. We can actually see their debt breakdown. Let's see presentations. I don't care about that. Quarterly results. Oh no, let's go to SEC filings right here. Oh my gosh, stop moving too much. All right, so let's see the most recent one. So 7/27/2020. Oh, they just reported. Look at that. Let's go to the PDF. All right, so let's go to the balance sheets. You guys chit-chatting over here? Oh, okay. Is Gnomster's Mike okay?
Yeah, he's just watching what's going on.
He's lurking. Oh, you saw the question, Kip? All right, so remember you can ask it more if you want. All right, so taking a look at what we got here. I've looked at this in the past, but we're just basically re-looking at it. Let's see here. We would see it basically like a quick glance in their equity versus liabilities and assets. So total assets at 6.1 billion. And the best way to do this is to actually draw a comparison. But let's see here on the debt portion.
Oh yeah. Yeah.
You see
much better, Dome.
What? You can hear him? I can't hear him.
Yeah. Yeah, I can hear him fine.
I don't know if the audience can hear him. Oh, you know what? I remember why I can't hear him. Because of Ready or Not. User volume's all the way down.
Oh.
There we go. I couldn't hear a word he was saying, so I might have been talking over him. Just
okay.
I wasn't talking that much, but even if I did talk, it didn't matter. Because you couldn't hear me at all. I literally was saying they're based in Massachusetts. I was saying I was talking about I don't remember. I think it was their dividend yield earlier. It's hilarious.
Yeah, no. All right, so now you're able to, I guess the people can hear you now. All right, so real quick, Austin, give the guy financial advice on any advice on dividend stocks for retirement. I'm just kidding on that, but I guess we can talk about it, in some capacity.
Yeah, I actually have a question before that. If I was a completely new investor, had no idea how to even read the balance sheets, or in this instance, the balance sheet, and I was looking at a REIT, how would you tell me to read this balance sheet? What would be some key things that you would look out for in this balance sheet, and then actually walk me through this, and then give me your opinion on the kind of company that you're looking at or how they performed on their balance sheet?
I love how
something.
Yeah, I love how a public accountant is asking me this.
Yeah, well, it's a question that I think people could actually find value from, because I don't know if there's people in the audience right now that might not have any experience with this.
Well, there's probably a couple. Capital Mindset has a ton of CPAs, people who work in financial advisors. Yeah. But okay, so everyone should know that you can depreciate land, right, Noam? Yeah, you can depreciate land. Everyone knows that. Land is super depreciable. Actually, there's a rule with land. You can depreciate more than 7 times the land's value.
Well, I was actually about to say you can do the triple declining life for land. Actually, GAAP just recently passed that pronouncement that will allow you to do that.
Yeah, they did that.
I came
All right.
out with the new
Oh, they just now came with new ones?
Well, that got rolled out at the same time as
Oh,
well.
okay.
That's why we.
True.
That's why we didn't learn the triple declining in school, because they neglected it.
Apparently, it is something to do with like goodwill, too. And yeah. I don't know. It's something.
All right. So to answer the Austin's question there, we can take a look at, for example, we have the rental property breakdown. We have land. We have buildings and improvements, net of accumulated depreciation, and we have for both years. So you can add back, it's net of accumulated depreciation. So you can add back for the original non-capitalized amount. Then we have deferred leasing, intangible. Okay, blah, blah, blah. But basically look at the total rental property value net. Again, that's not the market value. That's after including depreciation for said assets. So we got to keep that in mind. Land, obviously, if you guys can tell, we were joking that you cannot depreciate land, so don't do that, or don't think you can do that.
Triple life declining doesn't exist.
Yeah, exactly. So we have to clarify, because some people might be like, oh, what? But anyways, so we also can take a look at some of the debt securities that they do have. How are they getting this? So we do see some mortgages in here. So we see mortgages, notes, net, unsecured notes. So the unsecured notes is a massive portion of that debt relative to, let's say, comparing to mortgages. You can see that mortgages is broken down at 53. 1.2 billion is actually sitting for the unsecured notes. So unsecured notes, as per the name, they're unsecured. And then we also have unsecured term loans, and then unsecured credit facility. So that's typically on the shorter duration. So that's like a line of credit, so to speak. And that could be for improvements on lands. They might be doing that for improvements on the building typically. It's not really used to, it's not tied to the acquisition of a property, unless it's going to be temporary and they roll that over into a longer term note or something like that. So yeah, that's pretty much when it covers liabilities. I'm looking here and I'm thinking this company uses more equity than debt to acquire properties, and that would show up in its dilution rate. Austin, can you check for me the dilution rate of this company? You have 5 seconds. If you don't find it in 5 seconds, there will be consequences beyond your imagination.
1, 2, 3, 4.
He's testing me, guys.
Sorry, bro.
He's testing me, guys.
It's time for me to.
All right.
It's like
all right. Here we go. Unleash the punishment.
Yeah. Tell me how I'm be punished out here.
All right, you're gonna get an angry Christmas letter.
You've just been sanctioned $2 million.
It's $2 million, dude. What? Christmas letter to $2 million.
Yeah, that's what you deserve.
We don't mess around here.
We don't mess around, man. All right, so let's take a look at investor relations. I'm gonna pull up Prologis and kind of compare Prologis to Stag Industrial. Real quick, so we can kind of get an idea of what the big boy looks like versus the small boy. And I know someone's going to spin that phrasing into something terrible, but let's see here. Yeah, oh no. Austin just goes, oh no. Oh gosh, you guys crack me up. All right, let's see if the annual filing. No, let's do the quarterly. Prologis is probably going to report soon. Because they reported not too long ago. All right, so this looks terrible until we zoom in. Let's go here. Let's go to balance sheets. All right, so it's broken down here similar to the other one. So investments in real estate properties, less accumulated depreciation. So what they're basically doing here is they're not separating it to line item. They're just giving you the straight up amount. Then they're doing the accumulated depreciation line item, and then you have the net amount. So a bit different, but pretty much the same idea going on here. They don't have to follow the exact same format. So capital punishment mindset. Okay, that's actually pretty cool.
Capital punishment mindset.
I'm going to create a new channel. I always wanted to create a new channel and just call it,
frat bro mindset.
Yeah, no, frat boy.
Bro finance.
Frat boy finance. I've never been part of a frat, but just like.
Brody.
And yeah, my name's Brody.
One of the brothers. There's also like, you got to have like a brother whose like name is like Fresh or something like that, like Sky or something.
You guys do a cameo, you just have a hat backwards and it's like, yo, my name is Fresh. I invested in Tattooed Chef, bro. It's up 30% this month.
Like scream at anyone who disagrees with you. Call them stupid.
I took on student loans. I didn't pay my school tuition. I bought stocks instead. I'm investing in my future, bro.
Yeah.
School's
so much more
important.
Scam.
Yeah. Triple leveraged ETFs.
That's like the most frat boy finance thing you can do. All right. So I don't really like the way they're kind of reporting. They're really not breaking it down in as much detail as Stag. So Prologis, go yourself. No, I'm kidding. You're fine, Prologis. You're fine. You're within your rights. All right. But I prefer the way Stag breaks that down. Someone's saying TQQQ. Let's actually buy this. I didn't get to sell my contracts on Unum, by the way. I know that I was talking about that the other day, and I completely forgot. I was so busy today that I completely forgot to do that with Unum, which sucks. Oh, Austin, you remember Unum?
Too busy dealing with nonprofits.
Of course.
Yeah, too busy deaing with nonprofits today, man. All right, so
that insurance company. I also remember Markel.
Oh, wait,
pretty well as well.
But before, because you've been in a while probably since you've seen this. What do you think the stock price is right now?
I couldn't even tell you, dude. That's like asking me to like predict what the weather's gonna be tomorrow.
All right,
no idea.
So you took all the fun out of it. You didn't even guess.
Gold.
Yeah, I'm not. Oh, I think it's at $60. Oh, wow, 35. Oops.
Yeah.
Whoopsie.
But anyways,
Good.
Yeah. So this one, while a decent chunk of the market's not been doing too hot this year, look how good this one's been doing. 41.90%. Pretty solid, if you ask me. Pretty solid year-to-date performance. Anyways, so I'm going to probably do it on Monday because I forgot to do it today. I'm going to see what the contracts are like and see if I can replicate the sale. I did it around this time period. I have a video on it on Capital Mindset if anyone's curious. But yeah, it's like a really inconspicuous video. All right, so we're going to talk about Markel, Julius, because why not? I guess Austin and maybe Noam wants to talk about Markel as well.
I mean, I remember the first time we did that video about it. The company captivated me. That one and then Boston, Omaha, the two of those. I was like, ooh.
Yeah, we're gonna pump.
Interesting.
We're gonna pump Boston, Omaha.
No, we're not.
We're gonna totally pump it. No, there's a stock we should.
Fabio
pump.
is trolling.
We're gonna.
If there's any stock we can definitely pump, it's got to be Berk, bro.
Berk.
Definitely pump Berk. Yeah, we can just make.
Wait, are you saying Bird?
We have Berk.
Berkshire Hathaway?
We definitely have the volume.
We'll cause it. I've heard BRK, but never Berk.
Berk.
So it's like BRKA is Burka.
I forgot that there's no E in there. It's just BRK. That's right.
Yeah.
Yeah, because it's like Berk.
Yeah, I know.
Yeah, I guess we could. Ooh, actually, March of 2022, Berk was $539,000. Now it's dropped precipitously.
The way you just said that, it just rolled off the tongue. You're just like, wait, how'd you say it? Say it again. How expensive is it? Give me the ASMR. Wait,
$39,000.
Oh, how many cents? How many cents? How many cents though?
0.
0 cents? Oh.
0. Then it dropped precipitously.
Precipitously.
$439,000.
He's talking about Berkshire Hathaway, guys, by the way. So let's see here. Let's see. Markel Corporation is a company that for a long time has probably been very captivating to the audience. But this is often called like a mini Berkshire, but there's a bit of a problem with calling it mini Berkshire because I think its two largest holdings, or actually, I think it's for sure its largest holding is I think Berkshire Hathaway. Have you guys seen that? You guys ever seen their portfolio?
I have not.
The only
I
person
think we talked about Markel back in the day, maybe I don't know,
passing once or twice,
but I don't really remember too much about
during
it.
Tax class.
Something like that, yeah.
In the library after tax class before we got. Whatever,
yeah, well, with Markel Corporation.
What was it, like bento? We usually got. Well, yeah. Please continue with Markel. We can resume. Trying to reminisce where we used to eat food.
With Markel Corporation.
That one time at Bento.
With Markel Corporation, we have insurance, investments, Markel Ventures. So Markel Ventures is the part that you guys are probably really interested in typically, and the investments portion. That's what people always point to as the Berkshire-esque-ness of this company. So the investments portion, I think, includes a stock float portfolio, not stock float, but bond float portfolio. So they invest in, your typical bonds, and you have Markel Venture. Well, also in that investment side, you have the public equities, and in the Markel Ventures portion, you have the private businesses. And this is the part that has potentially a higher return potential relative to obviously the bond portfolio and the publicly traded stocks. So let's take a look at some of this. So the insurance part, I think they pretty much, if we summarize it quickly, it's reinsurance. So if we go to insurance offerings, you can kind of break it down here. So you see like reinsurance, international, okay, but basically a lot of reinsurance where they take on some of the risk from other insurers. And so if you guys didn't know, the insurance industry is pretty interconnected. Insurance companies insuring one another, et cetera, et cetera, et cetera. On and on and on it goes, really. So let's see what more or less what's going on here. I think they'll show us their portfolio. Where's the investor relations? Because I want to see their filings.
Didn't really have time to read into this too much, but there was something about some insurance companies moving out of Florida for operations due to the influx of residents. I don't know if you know anything about that or can shed some light on that, but that was something
sounds interesting.
I'm
going to look that up.
What insurance company was doing that?
Not sure the name of it. Let me get back to you on that.
Yeah. All right. So
apparently it's Florida home insurance companies that are all declaring bankruptcy. But hold on. Yeah, let me do some more research on this too.
All right, so I'm just pulling up into Markel Corporation. As a financial, it's going to be a bit more complex to really look at. I mean, with some of these, you want some of the metrics you can look at is a book value, very traditional valuation tool for insurance companies. So just looking at this, they have, I was trying to talk to you guys about, they have a fixed maturity security, so that's their bond portfolio. They have their equity securities. They have their short-term investments available for sale. So available for sale as designated, that's actually what it means. It's available for sale. So they're looking to sell this in the current portion or in the short intermediate time. So at some point in the future, they're probably going to sell this part. These are, I think these are, no, these are also available for sale. These are also marked out as available for sale. So they're going to have some goodwill from some acquisitions. That's going to be pretty standard. Receivables, restricted cash, reinsurance coverables, intangible assets. Yeah, nothing that really sticks out in terms of a bad thing. That's what I'm pretty much looking for. Unpaid losses, adjusted expenses. Life and annuity benefits, unearned premiums, payables and insurance, senior long-term debt. Okay. Oh, I'm getting a question here. You guys actually want me to show you one? I have actually one that's saved, and I already have the information marked out, so you guys can't see it. But if you really wanted to, it just gives me just a couple seconds. What do you exactly mean? Do you want me to tell you what trades I've been doing, or show you a photo of one?
Show him the photo of one.
All right, I have a very let me do this real quick because I have a very messy background. Where did I put it? Is this it? No, this is the. Where did I put this trade? Did I share this with the contract sale? I'll show you the contract sale.
Live replay of a trade. Oh.
Where did I put the tab? Oh, I don't want to lose Markel. Where did I put Markel? Ugh. Markel. All right, here we go. Go away. Keep you here. Live trade of replay. Yeah, so this is live. For those of you who are dumber than me, this means that it happened in the past. I know. I'm just smarter than you. But anyways, so this already has the information marked out. This is an options trade that I did. So I sold a contract. You can read how many contracts it is, but I basically just know I sold a contract on a position I have, HRD, and I generated a premium. And then I took some of this money, put it into a savings account so I can pay the taxes that I'll inevitably owe on this. And then the remainder of it, I actually put it into Meta. So Yeah, that's pretty much it. I haven't really done much because I have been too busy. What?
This is a fantastic question here. Any favorite healthcare stocks with good fundamentals that you like?
Any favorite stock? Oh, I think Milan wanted actually day trading. So I just like doxed something for no reason. I think he wanted a live day trade. Which I would have just done Dino stocks. But we can break out Dino stocks. Do it live. I'll write it. Wait, what was the question? Any favorite healthcare stocks with good fundamentals that you would recommend? That I would recommend? No.
No. That you like. That's why.
Yeah, we'll keep it there.
Yeah, because you can't recommend any stocks, but you can like stocks. That's the difference.
You can put a little hard on it. Yeah, that's about it. But
yeah. Healthcare stocks that are 4.5 pillars.
No. It is 9 pillars. You have to up the scale. So 8 pillars is not enough.
Well, hold on. This leaves a gaping plot hole. What is a 0.5 pillar?
No, ooh. That's like perplexed. No, ooh.
Sophisticated.
Okay, so basically from this question, are there any healthcare stocks that I do like? I don't own any healthcare stocks. Oh, I know. Wait. I own AbbVie, but I wouldn't necessarily say I like it now. We liked Bristol Myers Squibb back in the day, and that one's done well.
Someone asked me.
That one's done well.
And yes, I do still own Bristol Myers Squibb.
That one's done really well.
Yeah.
I mean, that one, when we did the video, when I sold it to buy something else. And, I said in that video, I thought it would do well. And you were still going to hold it. And you're like, yeah, I'm still going to hold it. And that one did really well. But BMY did well. So their oncology pipeline, so to speak. Vertex Pharmaceuticals also did well. I remember that one. That one was like a play that everyone was ignoring for that CRISPR exposure, but also that exposure to cystic fibrosis. What else? I mean, I have Cardinal Health. Cardinal Health, I don't know if they're definitely not at the value where I was buying them, where we were making videos back then. Like, look at that. You should buy my course because, like I said, we've had actually a lot of videos of stocks this year that have done really well. So like, while the market has gone down, they've actually performed really well. So Cardinal Health was another one.
That's exactly why you should thumbs up and subscribe, people.
Hulk smash the like button.
Hulk smash the like button. Freight computer. But Cardinal Health's reaching back up to 61, so I can't really there's just like that internal bias in my head that I don't like it because it's higher than where I bought it. But even though that's wrong, it's a fallacy. It could still be a good buy. Yeah, you haven't looked at BMY in a long. I think Milan. I think I remember you from back in the day. Milan, were you an old subscriber that probably even was commenting in old videos? I feel like there was someone called Milan back then. And if it is you, I haven't seen you in a while, man. How you doing?
No, that was my land.
What?
He's trolling.
Yeah.
There's no way.
I figured.
There's no way you would know that. So healthcare companies that I like now, I mean, geez, you're really like
Cardinal Health.
No, I don't think I like because implicit. I mean, it's the wrong way to think about it. They're the worst run of the three in the triopoly. So you have McKesson, AmerisourceBergen, and Cardinal Health. CVS is one that I know some of you actually like. Walgreens is the other one, but CVS and Walgreens have definitely diverged. So CVS has that insurance arm now in their business, which I think we've talked about in a previous live stream, is part of the business that's really helping it, while Walgreens, it's not. And I remember our conversations back last year, Austin, where that was one of the reasons why I didn't like CVS at the time.
Yeah, because it was overextending itself. That was basically your argument back then.
Yeah,
it was overextending itself. Meanwhile, I think it was Walgreens.
Yes. So during that,
hunkering down and like kind of decentralizing itself, if I can remember correctly.
So during that time period, Walgreens did outperform. So throughout the duration I held the two, I still made the right decision. However, the thesis actually, well, I didn't really care because I wasn't involved in it anymore, but the thesis changed because when the liquidity crunch started or began to start, and you had a rising yield environment where people think banks will do well in that, not necessarily. A lot of insurance companies would do well in that, and so we had some exposure to some insurance companies, but one of them that was kind of overlooked, I would say. Not necessarily, because it's not like it did really good, by the way, because you can see the pharmacy portion of the business did still have a drag effect. But what's helped the company in comparison to Walgreens Boots Alliance is, in fact, and I believe this for sure, is that exposure they have in the insurance sector. So that part of their business is doing pretty good. And you can see that throughout that same time period over the past year, you see that Walgreens is down 17.22%, while CVS is up 25.86%. So a huge divergence there, again, because of that, I believe, because of that insurance arm of the company. So their strategies are...
I don't think it has anything to do with insurance. I think it strictly has to do with the CDP climate score. DNA. That's all it has to do with.
Yeah, has nothing to do. Yeah, it has nothing to do with the actual stock. So it's just this one has A.
Why would somebody look at the financials even? What's the point?
You see, that's why they pay for the audits. This one has B though. Noam, what is your thesis? I don't understand.
I didn't even look at Walgreens. I just saw that originally if you scroll up, you see at the top it says
oh,
I don't even remember.
Wait, no, sorry. I want to interrupt you before someone says it because I want to think about it first. B equals buy, A equals avoid. That's what that means. That's what that means. So this is B for buy.
Julius, you got a little bit mixed up, bro.
Yeah, Julius, you got it mixed up here, buddy. It's B for buy, A for avoid. So if we go back to CVS, it's an A of... Wait. Yeah. Hold on. I'm confusing myself. This one would be buy. No, Julius is right. We're all foolish. I'm foolish, not you guys. I'm foolish. A equals buy because we have to make it make sense. We have to justify it within its realm. So we have to
justify it within its realm.
Yeah, we have to warp reality so that we're always right.
The financials don't matter, so the returns should matter either. You just kind of throw everything out the window. It's just like I own a stock.
That sounds like a very familiar philosophy. The financials don't matter.
I was about to say that. That sounds like someone's trying to teach me how to read balance sheets for a second there.
Yeah. No. He bought all the courses. I bought every course out there known to man. That's a fact. Yeah. So someone definitely went to UF. Okay. Someone definitely went to UF. Do you believe? Okay. Oh, here we go. So this is probably a question all of us can answer. Do you believe day trading / swing trading can be profitable? Can be, yes. Would
Most
you
of the
be?
Time?
No, but let me phrase it. Would you be? Probably not. Because who you're competing against.
Most of the time? No.
No. Yeah. Stop saying that because I want to sell them my course on day trading. You got to give them hope. So make sure to.
Just make sure you don't show them returns.
Oh gosh,
keep them convinced.
I thought we were supposed to do a non-drama.
Hey,
you're dragging us into it.
No, but you can have fun sometimes.
It's essentially equivalent to the same thing as sports betting. You can be right 30 times, but you're wrong one time, and it's a big loss. I mean, you pretty much just wipe out all the gains type of thing. Unless even if you are necessarily hedging your exposure, I mean, at the same time, you can still end up in a really bad situation.
Yeah. Oh my gosh, you guys are literally right on the nose. $79.99. Double dinos. Oh, the double dino. Yeah. Do you know about the double dino? Double dino surprise.
Oh, I don't even know what that is.
It's my new risk-free variation of technical analysis.
Okay. So this is if it looks like dinosaur equals buy the dip. Is that the logic here?
Yeah.
Okay.
So if I show you, let me show you the. I'll show you it. It's pretty flawless.
Burke. They're all calling it Burke now. No.
Yeah, Burke, baby.
You're gonna turn it into a thing. I'm not telling you. The double dinos.
Yeah, he is.
Trying to find it.
And then Voov is probably gonna get memed too. It's probably gonna get memed.
Voov, yeah, Voov. All right, so let me find. Come on. Let's see where it is. Oh, every time I look up Dino, Meta Dino, it actually is it's a fucking like shit coin. Sorry, excuse my French.
Meta Dino.
CVS does look like a dinosaur. So if we were to trade CVS, okay, let me. This is a live. This is an actual live. No, yeah, this is a live.
If you're smart enough.
This is not in the past. Therefore, all of you have high IQs because this is
not in the past. But like we're gonna show you. I'm gonna show you how exactly I traded CVS over the past year. Okay. So basically, I bought down here at the beginning, and I sold here, and then I bought right back there, and I sold here. Because the way I figured this out is that there's just a spike pattern. And so I just buy below and sell high. And then I keep buying low, and then I sell high, and I keep buying low. And then I hold because I know it's going to keep going higher this time. Because at this point, I know that we've passed 3 big spikes. So, 3 big spikes followed by like a little spike. And then we get this big spike here. I sell there. I buy back here, sell there. Do the same thing. Then I buy here on margin. I know there's going to be a big run up here. I hold because I'm a Chad this time. I'm not sure what's going on. And then I sell all the way up here. All right, that's basically how you do it. It's super easy. So I'll only show you how to do that if you actually, just like sign up for my course. I'll show you how to draw dinosaurs, and it's cool. What you need also is I sell with a 50% premium. I sell iPad Pros. So you'll need to buy the iPad Pro from me in order to participate in the course. It's only about $2,600 on top of the course fee.
Proprietary keychain on it.
Yeah, true.
Oh yeah, okay. So we got someone has gifted me the necessary components in order to actually do this.
No.
Thank you, Zuni.
Fabio.
What?
Fabio, this CVS kind of looks like a stegosaur.
No, this
is there something
is a double
interesting
dino
with
zuck.
that there?
Well, this is the double dino zuck. So this is the well-known strategy. It's flawless. So essentially what you do is you just make sure you're basically following this fact pattern or this chart pattern where you're basically trading it all alongside, but you want to make sure that the first dinosaur is kind of tilted. I've already gone over this, but for you guys who are bozos and low IQ, I'll just reiterate it again so you guys can actually listen to me. But I don't like, if you guys start criticizing me in the comments, I'm going to ban you. So that could be multiple references. I have no idea at this point. So the dinosaur horns are pointed in that direction. It just goes up, and then you can see here you have a first opportunity to sell at the first horn, but if you don't get it there, you'll have a second opportunity at the second horn. That's when you definitely want to be out of the stock. And then at the end, you're going to see remember, it's called a double dino zuck. So at the end, you're going to see a head formation. And at the head formation, there's 2 possibilities. Always the case, by the way. It's either going to go up or it's going to go down. I've never seen it fail, ever.
One of the comments here says, sounds good to me. Where do I sign up? I was good at drawing dinos as a kid.
well, just remember, part of the course is you have to buy this $3,700 iPad Pro.
Oh, it just went up another $1,200.
It's inflation.
Yeah, and also with the double dino, every time that there's another double dino on the screen, it increases by at least 1,000% in price. So
yeah, exactly.
That's how it goes.
Okay. So can I judge the value of this before buying the $3,000 iPad, or do I have to buy the $3,000 iPad first and then I can judge the value?
Well, the valuation model actually comes on the iPad, so you can't
all right, fair.
Yeah, you can't value the stock or anything until you have the iPad, because then there's essentially you can't just copy this strategy unless you have the actual picture on the iPad, because it's strictly you see the angle. I was gonna ask Fabio, what's the angle of the first one, or is that like not allowed to be disclosed? Is that
it's not allowed? Well, I'm sorry. I'm supposed to be acting as if like I wasn't a part of on this. Sorry, guys.
Well, it usually has to be angled at about a 30-degree pattern. around there. If it starts to get into 60-degree territory, it's probably going to be an avoid, because you might actually end up seeing, instead of a double dino Zuck, you might see Velociraptor Pelosi, which is a bit more different, a little bit more hectic. With the Velociraptor Pelosi, you actually want to make sure that you are probably doing a call option strategy with a nice straddle all the way down to, let's say, I don't know, maybe the if I had to guess, it's probably like going to be a reptilian Schumer or something like that. I don't know. It depends at that point.
Okay. So in this instance, then I literally cannot judge the value of the double dino Zuck strategy until I've spent the $3,000. Okay, that makes perfect logical sense to me. Now, where do I sign up? Because I was exceptional at drawing dinosaurs as a child. I actually think I could really contribute to this enterprise. Is there like a legal team that I should consult with before joining this double dino Zuck strategy? Like, should I be consulting with lawyers and only answering questions that my lawyers have advised me I should be answering?
Damn. Okay, like that's so on the nose there. That's like we're just like foregoing everything. That's so on the nose. It's like not even just hiding it.
I mean, we weren't hiding it the entire time.
No, there were actually multiple references that you could have drawn for my example. Now that's like hyper specific.
So wait, but is there like a specific haircut Zuck's supposed to have with the Zuck part of the double dino Zuck?
The double dino Zuck just forms a Zuck head, and that's basically all you can kind of. It really does depend on the stock in question that the Zuck head will kind of vary. Oh. We have actually a new chart here, because actually the new chart's going to be more important. So this one, wow.
Do they have a T-Rex chart? You got a T-Rex chart in there? Is that a viable strategy that I can employ after I buy this?
No, so this stock is definitely what the fuck am I even looking at? I don't even know what stock this is.
It's SPY. It says it at the top.
Oh, there we go. SPY. Okay, I see it. In
duck?
Yeah. So it's like the Duck Dynasty Spy or something like that.
It's so stupid. Duck, man. Who drew this duck?
But it always follows the same exact fact pattern that the head is always going to be the part where we're basically going to find ourselves in a place where it's going to be either going to go up or down. Always that. So, okay.
Is there a percentage allocation up or down, or is it strictly like 50-50?
It's either or. Never seen it fail
good.
though.
That's actually really good analysis.
Yeah, it's very helpful information.
I'm gonna put that on my pen.
Yeah, write it down. Over here. Write it down. Take notes, guys. All right, we're getting some. So this guy thought I was 35 years old. My gosh. He said okay, but he 35. Said no offense. Yeah, he thought I was 35. He says it's the way I carry myself. Oh boy, should
35.
I? We just all go full degenerate right now. He just like completely takes that back. We just. I'm the only one on camera, so that'd be not fair.
Playing the hide and go seek game together.
Just start gaming like right now, middle of the live.
All right. Actually, jokes aside for a quick second, I see a pretty good question here.
Yeah.
What do you think about the sporting goods stocks?
Let's do it. Sporting goods.
On those? And then I actually have a question for Nawam after this too. So.
Sounds good.
All right. Wait. All right. Sporting goods. So, retailer. All right. Preliminary thought. Okay. It's a retailer. What do they sell? They sell sporting goods. And I'm looking at Dick's, by the way, because you said sporting goods. So I just picked sporting goods, DKS. So, yeah. Someone's saying pure art right there. Okay, so if I go at this company over the past 5 years, I mean, that's tremendous performance. My gosh. I remember back in the controversy when they weren't going to sell guns anymore. So, yeah. Milan, Milan, I don't know if you answered this. Are you the one who's from the OG chats? If you are, what brought you back? I'm just actually curious. It just so happens you come on the night that Austin comes back. But I am 25 years old. 25 years old, which, by the way, that's actually the reason why in the discussion yesterday I was completely wrong in everything I was saying. So I'm just kidding. That's not what he necessarily said. But being facetious and joking there. All right, so looking at Dick's Sporting Goods, it has outperformed over the past 5 years, up 186.91%, well over the S&P 500, supporting a P ratio of about 7.57%, dividend yield of 2%. Let's take a look-see here at some of the financials. So Dick's Sporting Goods. Actually, we'll just go on the website. Why not? Just right here. Link a new tab.
Open the investor presentation.
Nah, I don't want to look at the investor presentation. They don't have what I like. You're not even gonna ask? Okay, I see. Not even curious as to what I don't like.
Yeah, what do you like?
No, I was just Austin didn't ask. I have it here. I was pulling it up. He just predicted me, so I got vindictive. All right.
Sure you don't want those new drops from new
capital
brands,
punishment mindset.
Yeah, capital punishment mindset. Petty capital punishment mindset.
Oh, man.
All right, so this is really important to see. It's the years. So basically, if you look back and you see in 1948, you see there's one store. And then you see in 2021, 861 stores. So that's all you really should care about, that they went from that many stores to that many stores, and that's it. And then we buy it. If the store count went up, that's it. That's kind of where it stops. So our values, we have a foundation, we have a provider, blah, 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 sports. Okay, so I think there was another one that people really liked. I'm trying to remember the name of it. So there's this one, I think it was like Outdoors something. Oh, yeah, Milan is the one. Okay, so he is. Yeah. So, yeah, OG, like slang for like one of the originals, I guess you could say. Yeah, Milan was watching the videos of Baba. Remember that stuff, Austin?
Oh, yeah. Dude.
Remember when everyone
it seems like forever ago.
Yeah, I know. No, it's crazy. Everyone was so positive on Baba, and then there was just like our channel just like going, nah, F that.
Yeah, I know, for real.
F that. And then that's how I guess like we eventually got known as the little channel that was like not bullish on Baba.
Yeah.
While you had like, I don't know, Sven Carlin, EM, everyone pretty much bullish on Baba, so. Okay, so no, did not go Mattia, but I'll share that with you in the, because let's not dox. Well, I mean, you can find out very easily. So now everyone thinks Baba is dead. Time to buy? Well, Zuni, you can answer that question. All right, Johnson Outdoors. It's not Johnson Outdoors. That's not the one I was thinking of, but good one. There's another one. Oh. But anyways, it'll come to me. Hopefully. All right, so basically what we look here is we see if the CEO is really old, we just buy it. Basically, we want to make sure that they have executive leadership experience at E-Trade. That's always very important to a bullish thesis. Experience at E-Trade. And yeah, how do you guys feel about that? He doesn't have experience at E-Trade, so it's probably a garbage company.
Opinion.
Just like NPC that. Like, opinion? What?
Yeah, I'm like, okay, cool. Bro.
I think it was Academy Sports Outdoors. Yeah, that's the one. Red Vermont ASO.
Yeah.
That's the one I was
that
thinking
wouldn't
about.
come to mind for me either.
I know. Who the heck is honking outside? These neighbors.
It's not as much in where I'm from, but originally there was Sports Authority, but Sports Authority went out of business. They went bankrupt like years ago.
So, I mean, Dick's Sporting Goods, I don't really know. I mean, I'm not really a fan of retail, but yeah, there's a space for retail. I mean, I kid you not, if I can buy it on Amazon, I just buy it on Amazon. And that's it.
What, you don't want the shopping experience?
No,
spending your time?
I really don't. I'd rather do other things.
Oh my, how could you
want to spend
your time out in the store?
There's only a couple things I like to do that with now. And that's if it's like a purchase that's a meaningful purchase in retail. You guys know what I'm talking about. Don't want to get into it. But or like clothes that are quality and long lasting, like a nice suit, stuff like that. That's like a nice experience. But you know, there's other things that I'd like to go to the store for to buy. If for the experiential process, I think it's nice. But anything else I don't know if everyone knows this. So a sneakerhead, I am not. How would you guys call me with shoes?
Couldn't give two craps less.
Yeah, like
much. That's a pretty good way to put it.
I care nothing for shoes. I think I have two well, I have a pair of Nikes that I had for now, Jesus, it's embarrassing to say, but like 7 years, because I'm just like, all right, they work. They still work.
Anytime,
I really don't care.
Yeah. I don't think I've ever seen you like care about brand name shoes or clothes, like ever.
No, like standard clothes like this, I think this is a shirt from Amazon. Like, it doesn't matter to me. That's silly. All right, so when is the second video of course coming out? Oh, okay. So the second video of course, the second course video, I'm working on it. It's actually, well, I'm not like working on like it's not being filmed in parts or anything, but I'm working on thinking what's going to be the next topic. I'm thinking of actually breaking down capital structures. So it's simpler than what you think it is. I'm not going like super deep in the first video. It's going to be later down the road, because hopefully at the end there'll be like a playlist. Like you can just like basically follow along, or someone can just join the playlist and then they just follow along the videos, or they can just select from the playlist the videos. But anyways, I think about breaking some different parts of the capital structure. So common, preferred, debt, different types of debt, like senior versus junior debt, stuff like that. So, something that investors should pay attention to. I think one of the biggest things that investors don't pay attention to is, for example, debt covenants and, what's going on if, like, what happens if that worst case scenario does play out? What's your defense? What's your protection? Are you shafted? Are you going to be okay? Stuff like that. It's not going to be the most important thing, but it's something that in culmination with everything else can be pretty important. On a case-by-case basis, which I'm going to executive decision, make us look at a stock again that was actually talked about in the Discord for me to look back. What's the no?
I want to look at it.
What? No, you don't know what stock it is.
I know. I'm just kidding.
You just don't want to look at it?
Want to look at it.
Okay.
Yeah.
I was like, you don't have a choice, buddy. You don't have a choice. All right. So anyways, wait, where am I going? Dick's Sporting Goods. I mean, like, what I'm saying is with these guys, they're probably pretty cheap. I don't really have an interest too much in them. How about the golf companies? I haven't actually gotten a chance to look at them yet. Like Callaway Golf, ELY. How do you feel about that one, Austin? I'm curious for you. And same with you, Noam.
Callaway's a good company. I'm not entirely. I get the bull thesis with Topgolf and everything, but I'm just not entirely convinced that golf is a high enough margin business to really invest into with as much competition as in the golf industry. That's my opinion.
Yeah, I mean, I would say pretty much the same thing. I mean, there's so many brands out there, and there's constantly more brands coming in, and there's most of these brands don't have much of a moat for the most part. I mean, I will say that when you buy a golf brand's equipment, you kind of stay with them for the most part. There is some type of brand loyalty for the most part, because you kind of each company kind of has their way of designing the clubs in a way that you would stick with them, because they kind of stay along that pattern, but at the same time
also,
they up their technology and all that. But for me, I mean, I've been using TaylorMade clubs for, I don't know, since I started. I mean, I use some other like smaller brands like Adams Golf and some other brands, but for the recent time I've been playing, I've been using TaylorMade for the most part.
TaylorMade?
Well, let me actually give you guys some context behind
Give us some context. There we go.
Every brand feels different. Like no two brands really feel alike. Honestly, no two putters, no two drivers. I don't know. I haven't really tried enough irons to really comment, but I can tell you for a fact with drivers and especially with putters, every single club tends to feel different. So that's definitely a factor that kind of plays into this. There is significant brand loyalty when it comes to golf, but I can also tell you too that Callaway is actually a good golf brand as well. So, yeah. Like I do know some subject matter experts in the golf industry that I could probably consult with about something like this, but just like
sounds so official. My gosh.
Well, I mean, yeah, this is yeah. Yeah. But that would be sort of like I'm kind of in like the same camp that Noam is in as well. So it's from an investor's perspective though, it can be a very difficult industry to sort of get into and invest into. Now, I also understand too the whole thing with Topgolf and the reason why people are bullish on Topgolf. The other thing about Topgolf too is that there's cheaper alternatives from Topgolf, and I feel like when people realize that, maybe they're not going to go to Topgolf as much.
Is Drive Shack
because, dude,
the cheaper one?
Yes, and it's the food is slightly worse, and sometimes your ball machine isn't working and it doesn't light up with pretty colors, and that's pretty much the only difference from Topgolf.
Do you want to go to Topgolf?
Would I want to go to Topgolf?
Yeah.
I'd prefer Drive Shack. I'm not gonna lie.
You prefer Drive Shack?
Same experience.
I've never been to Drive Shack. I've only experienced Topgolf.
It's pretty good, and it's not as expensive as Topgolf is either. Like it's actually cheaper to golf too.
I'll tell you guys a fun fact about Drive Shack after this, but yeah. All right, we'll make it happen. We'll make it happen. If we can't make it happen, it's the thought that counts. Because yeah. Anyways, we'll talk about Rick as well because I see some people are asking about Rick, and I gotta tell you guys, Rick is a fantastic business. Oh my gosh, I'm just kidding. But
if you want to click on the Cushnet over there, by the way, I can shed some light on what that is.
Where? Who said this?
It says it's the second stock. It's a Cushnet Holdings. Right,
oh, this one. Sorry. I thought you meant it was a comment. I was looking for a comment.
Good.
No,
so
I'm not.
That one, I mean, I saw the return on that, and I was honestly kind of surprised. But they produce golf balls for Titleist. So
Interesting.
Titleist is one of the I don't know what's the word I'm looking for. Kind of Hallmark brands. That's kind of what I'm looking for. Pretty much like a Hallmark brand of golf. They've been around for years, and they advertise themselves as the #1 ball in golf and all this stuff. And the majority of pros use their golf ball, but they've started to lose their touch and their moat on the tour and also just amongst the whole golf world. But at the same time, they've been able to produce a great golf ball over the years. So they've apparently also have a significant return on investment.
Okay, so this is one I'll pay attention to. Okay, I mean, they're not, on a quick look, depending on how fast they're growing, they're not trading egregiously expensive. I think actually on this same quick look, I think ELY is trading more expensive. Let me get rid of you. So yeah, 33 versus 21. But we'd have to take a little bit deeper dive. So, because here you're getting Topgolf, which is, a good brand. A lot of people associate it with, having a good time, that restaurant experience, et cetera, blah, 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 blah. But with the things you're saying, okay, that's interesting. All right. I know I want to also give everyone a sneak peek, but did you do some personal due diligence on Rick? No. I haven't never been to a place of Rick's. There is a video that I had coming out about Rick, but it's mostly a joke. But then actually when I was doing more digging on Rick, I actually kind of was like, wow, there's actually some good stuff with this company. So there's some interesting thing that happened in the past with management, but it's a lot of disclosure stuff. But it was minor disclosures. And when I actually tore it apart, I think it was just a couple $100,000 over the course of many years that they just failed to disclose in compensation, which isn't really that much in the grand scheme of things. The management team they're not the most professional. Well, they're professional, but they're not the guy didn't go to a crazy business school or anything like that. He would pretty much just kind of learn on the job, and he's a really good manager at what he does. And it's a company that, do you guys know what Rick does?
Yeah, I learned over the course of some live streams at this with the capital punishment mindset. Capital punishment mindset.
So you know what Rick is, Austin?
Nope.
Well, it's a adult entertainment, not entertainment. Entertainment, yeah. But adult entertainment company.
REIT,
No, it's not a REIT. They own a lot of nightclubs, sports bars. The sports bars is their newer segment. I forgot what it's called. I think it's called something military-esque. It's basically it's a sports bar, basically. It's a sports bar concept that they're really trying to grow. They have strip clubs as well. So they have also nightclubs. So nightclubs, strip clubs, bars and restaurants, and all that jazz. So there's a lot of economics that are pretty nice, and I think they're the only publicly traded company in here. Oh, it's Bombshells. Julius Caesar says it's Bombshells. So thank you, Julius Caesar. So it's a pretty unique business, actually, and it's going to be potentially always unloved, I think. So I don't know. I'd have to really see what price I probably want to get it at, but they've been growing a lot. over the past 5 years, but there isn't really the speed at which they can grow in like the nightclub market and in the bars market. Well, not the bars market. Sorry, both the strip club market and the nightclub market is fairly capped because each year there's only a given amount of quality clubs that want to sell. So yeah, and I think when I found out, there is actually one more competitor, but it's not publicly held or publicly traded. And yeah, so John G. I bet they have a ton of cash on hand. Actually, funny enough, they don't actually collect a lot in cash. That's their employees who get the tips in cash, but they don't actually get the cash. They actually get paid a lot in credit cards, funnily enough. But yes, that is a good joke, though. That is a good pun for this company. So I'll still probably release that video, but note that video is mainly a joke. Dan Weston is always trying to push us towards these very beautiful companies. So Tractor Supply is another one. So Tractor Supply, a lot of these boring companies that no one cares about, but probably going to be better for your portfolio in some cases. But Tractor Supply, look at that performance, guys. Well, there's a delay for you guys, but you can see it probably.
Oh wow!
Now. Yeah,
that's crazy.
Yeah, so this one's another one. Carrier we'll talk about in a second, but Tractor Supply, they have. There's a good, interesting thesis behind them with people maybe moving more rural, away from cities. That was like a thought that people were having. You can see since the pandemic, though. Look at the explosion in this company. Like, look at that. 148% even till now. I mean, assuming you bought them. But let's say you even bought after this leap up here. My gosh, dude. Still 43%. Anyways, wonderful performance there.
There's only one piece of analysis I have, though, is that if A equals by, B is going to be bad and C is going to be capped. So these returns here are definitely going to fall off based on our climate score. It's just not going to happen.
Oh,
it's fact. No, it's fact. If it's not B or a C, then you just don't do it,
Do you see that, guys? Lord Slayer, by the way, lovely name, Lord Slayer. We have, where is he at? There it is.
They close all their insurance offices.
Call me for it. No, I'm kidding. but no, seriously, like, okay, that's really interesting news. So BRK Beat is doing that. Okay, so they're closing. I mean, why house them there? You don't need people. Like, was it corporate offices, or just like insurance offices, like where people do any form of like appraisal work or anything like that? That's interesting. Did you talk about the jobs report already? No, we haven't actually talked about the jobs report. Did you guys want to talk about the jobs report, or is that something that we'll leave off for another video?
We could probably leave that off for another video. We could probably just keep looking at a couple more stocks and then just,
Okay, so we'll do that for another video. But yeah, do you think Amazon could buy 1-800-Flowers? You asked me about 1-800-Flowers. I haven't looked at 1-800-Flowers in a very, very long time. So I think the ticker symbol is FLWR. No, FLWR. No. Oh, what is it? Oh my gosh.
Yeah, what's the story, B. Ross?
What? Yeah, what's the story? Wait, who's B. Ross?
He's the guy behind Burke closing all of its insurances in Cali.
He said IK. He fixed it. He said, I know the story behind.
Okay, yeah.
What is the story?
I thought he was memeing and said, "I'm the story."
At first I was like, true. Oh, okay, apparently.
Then okay, IK. All right, yeah.
So we have 1-800-Flowers. My God. Just absolute destruction. Just like doing really well during the pandemic and then just. I mean, look, you guys want to see what it's like back in the olden days? Check this out. It's been around for a long time. So for a very long time, you bought this all the way back here. You're still down 40%.
Oof.
Because you know what it is. Look, it's a .com stock. Flowers.com. This is an old company. This was part of the .com bubble. It just wasn't like a tech company. It's just like, oh, we sell flowers. But yeah. Will they buy it? I have no idea. Look at that. Look at that for the same time period, 156,000. I totally bought Amazon back here, and I bought it on leverage, by the way. I bought it on a 30-year fixed rate. not lying whatsoever. Specifically, the regulatory environment. Okay, so Cali isn't friendly to BRK insurance companies, specifically in the regulatory environment. I mean, like, yeah, that's the thing. With a lot of those companies, if you are able to just get up and go, why would you stay there? It doesn't really matter. You know, just come as the economic migrants. Come to Florida.
I found something interesting here on the Wall Street Journal, and it says California puts former Berkshire insurance unit under state control. And so
what?
Yeah.
Wait, read more into that. What does that even mean?
Interesting.
What?
Yeah, hold on. Let me I'll actually send you to the article now.
Oh,
yeah. Check.
They did ask me to look up this stock. I see you, Zuni. I got you. So Zuni, I remember I actually we did see this, and I remember you guys saying it crashed recently. So this was a high flyer. I mean, look at that performance. My gosh. I mean, okay, so this one's a REIT that owns a lot of properties having to do with cannabis. So if you guys aren't aware of this one, lots and lots of cannabis. So you have Tilray. You could have owned the real estate, or you could have owned
Fabio.
the company. What?
I'm just gonna cut in here just for a quick second. Just read these two paragraphs.
Yeah, go for it.
The California Department of Insurance said Tuesday that California Insurance Company, one of the insurance companies owned by workers' compensation insurer Applied Underwriters, has been placed under state conservatorship. The regulator said the move came in response to the company's willful violation of state law, established pattern of continually flouting California's regulatory processes while under conservatorship. California Insurance Company can't cancel any existing insurance policies and can only issue new policies with the conservator's consent. California Insurance Company has $185 million in written premiums in California, according to the state regulator. So, that's really interesting, actually. So the state of California just straight up said that a company under Berkshire Hathaway or owned by Berkshire Hathaway, either or.
No, wait, what kind of insurance?
I don't know the specifics.
Yeah, no, there's specifics that need to be read on that. That's kind of like necessary.
It seems like a workers' compensation insurer. So I'm gonna.
They probably just assumed it because they were leaving it, and it just wasn't worth it for them to keep. So it just got assumed by the state. Yeah, good luck. Let them have it. So yeah, just let them have it. Did they fork over the whatchamacallit? Oh no, because in this case I think they're abandoning. So they'd probably also give over the float. Did they give over the float or the assets under float? Like, did they take away the bond portfolio associated with those liabilities?
I don't know. It doesn't. I think it's only affecting their ability to.
So they basically look. B. Ross is giving us So in California, you have to get premiums approved by the state. What the heck? They cut their commissions for selling policies in Cali a little while ago. From my understanding, they are not trying to conduct business in California as much. Yeah, I mean, if it's whatever, let them do it. Doesn't matter to me. That's why I even say to people, it's like, at the end of the day, I want to be in a position where I can just like literally just get up and go. I don't really care. You guys do you. You guys decide how you guys want to do things. And if I don't like it, I'm out. That's how I live it. All right. So innovative industrial properties. Yeah, I mean, I'd sympathize. Yeah, I'd probably say that too. So innovative industrial properties. Let's take a look at the website. Let's see how this is going. All right. Look at that parking lot. Very bullish. No, I'm kidding. Gotta have some jokes there.
If there's more than three red cars in the parking lot,
if there's more than 3 red cars,
it's a buy.
All right, so let me see. Yeah. Oh gosh, look at that. There's Colorado, California. Hey, Florida. High value land right there. New York, Virginia. Okay, Texas. Okay. Yeah, but lots of California, Arizona. So they're pretty spread out. A lot in the Northeast right here. A lot in the Southeast right here, a lot over here. All right. So, okay, our business. I mean, this is one thing. I don't know if they're able to get. Are they able to get funding? Because I know there's a huge difficulty getting funding for weed companies in general. Oh, I said the word. YouTube's going to demonetize.
They can't get federal funding. So
or loans.
I don't think.
Yeah, they can't get loans.
Yeah, no. Yeah, no, I don't think. Well, yeah, because they can't get loans from banks because they're federally funded.
But I think they don't fall under that because I think they're just a real estate.
I
don't know.
I think they still do, but I could be wrong.
I think that I'm not sure if it's like part of their deals that they do. I'm pretty sure they borrow to buy land because that's the thing that they're doing. They're buying the land. And then the operators, they extend some sort of some sort of loan agreement. I'm pretty sure that's what they do, if I remember correctly. And that's what's interesting about this company. So they're not just a REIT, but they also are kind of like a quasi lender. I don't know if that's them, but yeah. No, guys. You know, the best marijuana company is that what's the one that Avant Brands? That's the one. The one that Jeremy pumps. Let's see.
It's not. No. Planet 13 Holdings.
No. Avant
real
Brands.
estate one.
No. I'm telling you, Avant Brands is the other one. Avant Brands is the really tiny one that he actually can pump. But it also is Planet 13. Planet 13 is his other one. I know. Okay, everyone's beating me to Planet 13. They're like, no, it's Planet 13. No, he also did Avant Brands, guys. Check it out. He also did Avant Brands. Planet 13 would be harder for him to pump. Avant Brands would not be that hard for him to pump. Okay. I think Kevin also interviewed the Avant Brands CEO. But anyways, kind of focusing on this. I think this is it right here. This is why. This is it. Okay, so this is what I was talking about. I knew it was this company. So Innovative Industrial Properties acquires. What'd you say to me? I know what you said. Don't worry. So the sale leaseback agreements, that's how they basically get funding a lot of these marijuana companies. And so in order to, what are we looking at? Kingdom of Finance? We're looking at Innovative Industrial Properties. That's what we're looking at. So they do a lot of sale leaseback agreements. Basically, they find a operator. They're like, hey, you got this land. You can sell it to us. That's basically how you can raise some capital. You build out your operations, and that's like your loan. And then you lease it back. You lease the land back to us. So this is actually, I don't know if they're the only one doing this. We can find out. Can you guys try to find other REITs that are in the marijuana space? Noam and Austin?
Sure.
Yeah, 1 second.
I can tell how much energy Noam has from the program.
Yeah, no, I'm like dead.
Just by the way you're talking, you're like, oh, 1 second. Yeah. Isn't True Believe the company that's about 70% sure of fraud? Interesting, Andrew Marshall. Interesting. Ooh, we can take a look at it. Austin got excited. His ears perked up.
I'm gonna take a look at. Oh
Yeah.
Yeah.
Yes, Kingdom of Finance. If you want to phrase it that way, yes, it is a weed stock. Sense husband. Sense husband? Who's Sense? What is Sense?
Probably another one of those. I don't know. Hold on.
And it was related to building for True Leave.
Right now, I'm interested in this. True Leaf Cannabis Corp. Fraud allegations against.
Oh, the CEO of True Leaf. Wow, the CEO of True Leaf. Okay, so I'm actually curious now. Let's actually look at True Leaf. So True Leaf.
True Leaf responds to fraud report as shares slide. True Leaf Cannabis investors have been hoodwinked.
A bribery trial.
An opinion piece. Yeah, that's an opinion piece. So what I just read.
Opinions. I hate mobile. The CEO of True Leaf is hot. What?
What?
That's what Kingdom of Finance says. He goes, the CEO of True Leaf is hot. Not gonna lie.
What?
What
the? That's funny.
Oh nice, my gosh, Austin! It fits the fact pattern.
It does. It fits the fact pattern.
All right, so True Leaf CEO fraud. So it's what? Something to do with a bribery charges? What?
Oh man.
What happened?
You're just like pulling up pictures and this guy, and I'm just still laughing at it.
Oh yeah, I forgot there's a delay between what you see and I'm seeing. Yeah.
Yeah.
Anyways, so CEO. Okay, we don't care about this. True Leaf. Let's go to stock. Let's see how they've been doing.
Yeah, so I mean, I'm looking up competitors, but everything that says to be a competitor is either in growth or they're in like tobacco, I can't find a direct competitor with them yet.
I know that there's Universal Corporation for tobacco. They're like a farm company. Let me show you guys. I bet you guys didn't know about this stock existed. So here you go. Here's another one. Universal Corp. This is basically a company that, no joke, just pays everything out as a dividend. Everything. Just like the entirety. Everything it makes. Just pays it out as a dividend. And it just makes tobacco. And I think they bought a fruit company, so they also make some fruit now. Yeah, so that's there. And how's Altria doing? I'm just curious because I like to follow Altria still. Let's pull up Altria. Who's this? Who texted me? Oh, Strongman texted me. All right. To be honest, marijuana is garbage right now. Lots of mom and pops and new players driving down margins. Hard to see who will be the winner. Yeah, I agree with that. That's why I like to play my cards with Avant brand. No, I'm kidding. I should really not do that. I don't own any Avant brands, nor would I. I don't endorse it whatsoever. I don't endorse shorting it either. See, I'm walking on eggshells now. I have actually been buying some Altria after the drop purely for the dividend. I mean, did you know that Altria actually has been one of the best performing stocks of all time in history? Fun fact, when you include the dividend. Fun fact. But the terminal value of all the cash flows is still like, there's still some value in there, quite literally. I mean, depending on how long the cash flows last, right? Because we do see that it's a declining base. So the smoker base or the tobacco usage is declining every year. And so depending on how long that really takes, you can actually derive some value. So yeah, I don't know if you guys want to have the dividend philosophy debate or something like that, but yeah, we see some dividends for the win. Oh, there's also CMI. Remember when you liked this one? Cummins? Oh, dang it. Cummins like recovered, bro. What is this?
I remember this one.
What is this sorcery? Cummins
what about Honeywell? Look up Honeywell.
Nah, Honeywell, I doubt that's Honeywell's. Yeah, you see, like, look at that. I was wrong to sell Honeywell. Woo! Wrong to sell it. Anyways, no, I'm happy that I sold Honeywell. Yeah, Honeywell's another quality company. 3M, I think, as where's it at? 147. It's basically like kind of recovered. Yeah, look at that. Just basically went prop. Leggett and Platt's the one I've been buying.
What about LyondellBasell?
LYB? Yeah, LYB, all these chemical companies. I'm actually wanting to buy a Dow Chemical. So, yeah, you can see it's actually back down to these levels again, which is actually pretty nice. Oh, I mentioned this in the Discord. Yeah, we'll take a look at FND. That's actually going to be fun. See, this is the fun stuff. Looking at the stocks. My home's book values. Listening. Oh. Yeah, I love coming. See, look at that. We have all the boring stock investors now in the chat. I like this. We haven't mentioned. Well, we have mentioned technically some drama, but we haven't mentioned drama really. Carrier is another one. I like Carrier a lot. So Carrier is the one that I really effed up with this one. I picked Otis instead of Carrier in the spinoff, and regret that. Buyer's remorse, definitely. But if you actually see why, Otis trades at a much better multiple. Because it is, I was correct in my identification that it's a higher quality business for now, or at least that's what the market thinks right now. And even back then it did, because I think Otis was trading at a higher multiple. I thought that there was a chance, we could see some, or that it wasn't at that crazy of a multiple back then. I think it was definitely under 20. But anyways, they have a lot of recurring revenue for their services rendered to maintain the elevators and escalators and all that jazz. So then Carrier was the other company that spun off. And yeah, it's trading at a much steeper discount relative to Otis if you could compare the two. Only comparing them because they're coming off of the same company. Oh my gosh. Look at that. Just like
what is
quick run.
What is it about F&D that is so captivating?
Let's take a look at it. Floor and Decker Holdings. So let's actually kind of explore what this is. So Brandon Floor and Decor is a I said Decker. It's Decor. Multi-channel American specialty. I think because I'm thinking of Stanley Black & Decker, which is another company people have been asking me to look at. The company stores offer wood, laminate. Okay, so
it's funny because I didn't know they were publicly traded, and I was actually at one of the locations with my dad, and then he mentioned it.
Interesting. We are now
My gosh.
on live stream together looking at it.
Yep.
It's up 43% from that run up that we had July. July was a good month for some of these guys. Same store sales are up 13%.
Wow.
What?
A lot of renovations going on right now, and a lot of new projects. Then is what that means.
That's nuts. Did you buy Celine's yet? No. So this is another one I'm actually looking at, guys, if you're aware. So I'm actually interested in this one in Dow.
So
yeah?
my question is, how is F&D keeping its costs down with like rising costs of wood and et cetera, so forth?
Well, aren't they a retailer?
Okay, fair enough.
Yeah, they just have to buy it and then sell it.
I don't know. I don't know anything about this business, so I'm kind of learning here too. I'm going through it.
Well, so like if we go to the website, I mean, Noam, you've been here before? I've never been to one.
Yeah,
so.
I've been to a location, yeah.
So when you go there, you just buy for your renovations, right?
Yeah, you just see like all the raw materials. Like you see these how
Precisely.
they have like the tiles and
whatever you want.
And yeah, I mean, like
wood.
if you go back, scroll to the middle of the page or whatever, that's fine, I guess. Yeah, like you see those. Just go in the middle. No, a little bit up.
There's a delay. This is nuts.
Yeah, no, a little bit further up from there. It shows like the options you have to buy. There you go. So it shows these where it says like popular products. You see these different tiles and whatever. Essentially, they just have like different like a sheet of it, and you can like pick it up and like check it out, see if it's what you're looking for, all that. And they have like countless options to look through. And then you kind of figure out what you're gonna do with each room, type of thing, and you estimate how much you're gonna need, all that, and you buy the materials, and you either have a contractor take care of it or you would do it yourself.
Okay, fair enough. All right, so basically with that, then we would care about the price of commodities to the extent that the consumer rejects them. But if the consumer's not rejecting the higher prices, then it's all well and good because we're just sourcing and then selling. That's all we're doing.
Well, I mean, it's kind of what we talked about before with regarding house prices as well. If somebody's going to hold their house for 30 years along the length of the mortgage, they're not really going to worry as much about the price right now if they have to move. Just like right now, if you're trying to upgrade your house and you're going to live in that house for 20 years, you're not going to nickel and dime over the renovation because you're going to see the return on investment over 20 years rather than pushing off the project until later. This way, if you get it done now, you'll be able to reap the rewards of the new bathroom or whatever you're building, kitchen, etc.
Oh, okay, so let me show you the floor plans. This is going to get boring. I'm going to show you guys live, I guess, this. So this is a place that we might be actually buying.
Oh, cool.
Property.
But he's going to straight up dox himself.
No, because it's not going to be my address.
Shows the address. Someone else buys it before him.
Oh my God, I will hate all of you. Whoever does that, if one of you does that, I will hate you forever. I will find you. No, I'm kidding. it's fair game. If they want to sell it to you, it's fine. Where's the floor plan? I'm just trying to show the floor plan because it's so nice. So this way, like we actually are we're gonna be in a really good location for all of you guys to come visit. So we're actually gonna be pretty close to you, Noam. And well, Austin, go F yourself. But I'm just kidding. But you're far.
Right.
There's nothing I can really do about that. And it's at a really good location. I really like it. I'm trying to see where I can. I can probably show. So I think they're really nice for a particular reason. I'll try to find the. I guess I'll just show this. So this is something that was. I want to show the rooftop. The rooftop's like really freaking cool. Do they have a gallery? Yeah, gallery. Here we go. So this is like the rooftop, man. It's so nice. You get like this barbecue thing. Oh, no. I wanted the rooftop. I just want to show you guys the rooftop. The rooftop's cool. Yeah. So like you get this view. I think it's cool. It's a good place to have. Hey, that's my house. We're doxing, Will P. We're doxing you. So yeah, this is like actually a new area that's being under development right now, which is actually really cool. Orlando is just like massively growing, but
it's pretty sweet.
Yeah, no. So anecdotal. Well, this will be the hangout spot. This will definitely like we'll have like barbecues and stuff, definitely. But
fun.
Oh yeah, we're gonna have fun. We can put like a mini golf thing, and we can just like golf up there or something. But anyways, what I was getting with is I need to say anecdotal evidence. So Toll Brothers, like a year ago, they would have been like, nah, go F off or whatever. Or any of these builders would have been like, F off. Like, we don't care about you. So now they're like kind of, it's almost like they're getting like, they're like, please, you want to come? So my wife and I were actually going to visit tomorrow. And who knows what comes out of that we might end up deciding to literally lay down an offer deal. Well, not an offer because it's a new construction, but a deal, so to speak. And we're going to probably do all like the, I guess, structural upgrades that we can. But yeah, anyways, so they're offering a huge amount of incentives now, which they weren't offering before. Anecdotal evidence again, so everyone might have a different experience depending on where you live and all that jazz. But yeah, it's pretty interesting because as you guys know, Austin and Noam, you guys know that homes have been selling around all of us like hotcakes, right?
Oh yeah.
Yeah.
Noam.
Yeah.
Oh yeah.
oh yeah.
Yeah.
And the rents too, man. I was shocked when I was sitting with Noam. He was telling me about how the rental market was, and I was like, no, there's no way. And I told him some rents that I was like, I expect like these rents because I was using like past numbers in my mind. And then he's just like, no, man, it's changed. And then we just went on Zillow, and I was like, oh my gosh, like everything.
Yeah, he was totally out of touch with reality. I was like, dude,
I was
you were
way
like,
out
so far,
touch with reality.
So far from it.
So in the census, when they say owner's equivalent rent, I'm just completely breaking that statistic. I'm just completely like undercutting the owner's
CPI calculation.
The CPI calculation wasn't catching up because I was voting in. I'm just like filling it in, just going like, yeah, Orlando, 1,200. Meanwhile, it's like 1,900 or something like that.
Yeah, I mean, with this 2.2 I'm renting, they wanted to raise me to 18, and I'm like, okay, well, I'm probably gonna look at my other options. And then they, came back with a better number. I was like, okay, yeah, then I'll stay.
Negotiate. You got to do that. You got to negotiate.
Well, it wasn't even really negotiating. It was more so just that like they kind of told me what their plans were, and then I was like, yeah, no. And then because I said that, if that's going to be the case, then I'll definitely look at my other options because, you can't just say yes to a crazy increase like that if you can work around it.
Yeah, I mean, yeah, but like, just be like, hey, no, and then let them know. That's basically. Oh, yeah, we have looked at Zimstock in the past. Do you guys know about Zimstock? It's like this shipping company.
Yeah, that's the Israeli shipping company, right?
Yeah. Oh, did you just say Israeli?
Really?
Isn't it?
It is.
There's a war right now. You know that?
How do you know that, Noam?
How do I know that?
Yeah, how do you know they're at war?
Because I've been following my social media sources.
Why are you following Israeli stuff, Noam?
This guy. I have friends that live there, so. I mean,
no, but all seriousness.
But what do you call it? Yeah, I mean, I can kind of sum up what happened essentially, but I don't know the full story. But what I do know is that there was some other countries and certain groups that were gonna get ready for some real bad stuff, and essentially the defense forces, the IDF, the Israeli Defense Forces, took out some head targets from some serious groups, and they're retaliating now. So there was 100 rockets sent from Gaza into Israel overnight. It was a few, like 6-7 hours ago now, but
it's probably going to be
a lot of them were shot down, but it's been crazy. So
it's probably going to be some turbulence in some Israeli stocks then.
Yeah, I mean, I would assume so. It's kind of, a similar situation with, what's happening in Ukraine in a lot of ways, but, that's a little bit of a different conflict in a lot of ways.
Have you guys also checked out like Fiverr stock? Someone's saying I'm looking at Fiverr.
The Fiverr business model is most certainly pretty interesting. It's pretty much acting. It's kind of that thing that you were telling me that one time, I think when you and I were talking, maybe on video or maybe off camera, where you're basically looking for businesses that don't like exactly create. I mean, how do I phrase this? They don't create the content. They act as a central platform to host the content. In that instance, like Fiverr is like putting freelancers with like people that need these sorts of skills together, and they're actually basically ranking them by price tier. So it's like what's assumed and what's implied is that like the better quality freelancer, you're going to be paying more for those services in that instance. I think Fiverr's a pretty unique business model. Now, in terms of the actual financial performance of the company and the balance sheets, I don't really know enough to comment.
Go for it. Why not? Well, you keep talking. I'm looking at it. You keep talking.
But yeah, so especially like when it comes to Upwork too, because I also see that Upwork kind of gets lumped in there as well. Like Upwork kind of has a similar business philosophy too, whereby I think Upwork is exactly that. I think it's connecting clients with like software developers. If I'm not mistaken. Yeah, I mean, personally think
they would definitely have some synergies.
Yeah, and like I personally think the business model of both, honestly, Fiverr is pretty unique. It's just, yeah, I haven't really looked at its financial performance, but hey, you know, that's what the internet's for, right?
Well, let's check it out. So I'm on their 20F. All right. Oh, I hate how when they do this IFRS.
All right, revenue my avenue is increasing.
With yeah.
PE. All right, PE is 75.92. Not a buy. Doesn't satisfy the pillar under 25.
Oof.
Actually, I'm annoyed with it. I'm just gonna use my own tool to do this. It's annoying. It's easier to do this. Okay, so Fiverr, what is the growth estimates that they have for Fiverr? Does anyone have that up? I can probably pull it up.
I'm not sure on that one.
Wow, it was pretty seriously overvalued.
Oh yeah,
in September of last year, and now it's just taking a crud on itself.
No, this is one of them that I was like kind of going up against, not going up against because he probably even know I made videos or about the same stocks, was Sasha Yanshin or whatever his name is, and he was very bullish on Fiverr and he was very bullish on Pinterest, and he's the one I told you guys about who he put EBIT twice.
Oh, he put it three, like it was EBIT, EBIT,
yeah,
EBITDA.
You guys saw it.
Yeah.
Yeah, I remember this now. Yeah.
Yeah.
Yeah. No, hey, Nash King. Remember, I'll tell you right now. I don't really like the drama too much. I like more of this stuff. This is up my alley. I feel at home doing this stuff. Just talking about this, hanging out. It's more relaxing.
Like drama's fun for laughs, but like if your channel just turns into a drama channel, it can get exhausting after a while. Plus, it's a very unsustainable way of growing, but that's just my personal opinion.
No, and I don't really care about like growing. I prefer it if Capital Mindset just grows organically, like slowly with like a good crowd. That's what I would probably prefer, because I think the drama also draws in a different kind of attention. I only included the drama for Everything Money or EM because a lot of people just came forward to me about the stuff, and I was like, dang, this is like no one's talking about this. I was like, all right. But I think other people are starting to pick it up. So if they take on the mantle, that's great too. Because I told them they can have access to everything I have. And they can make all the content. If they grow and become a big channel because they oust people or whatever, great. Good for them. Anyways, aside from that, so Fiverr, we're looking at, I mean, their margins, I assume, are freaking ridiculous. They better be. If I see something elsewhere, I'll try to use this because I like to use the source material. This is annual report, select the financial data. I'll just do this and we'll find it. I hate going through.
Your XBRL, man.
There we go. All right, so we find their operating results. Yeah, that margin's like fat. That's a fat margin. Oh, I never got into Uber. We'll get into Uber. Who asked? Adam asked a question. Someone said, "Good question, Adam." Good question, Adam. Who's
I tried
Adam?
finding it and I couldn't find it.
You can't do that to us, Milan. Come on.
Wait, hold on. Bruh just said, do you guys remember?
Said, hold on,
Jeremy said he was investing in Tattooed Chef to end childhood obesity.
I don't remember that.
Adam Krasnicki said, Fabio, wonder if you have insight. Why do all utilities have negative cash flow? There must be a reason. I do own UGI that has positive free cash flow, but maybe only one I've seen, and is a dividend aristocrat.
I think I can find a couple that are positive cash flow. First of all, let me see if I find this one. Okay, so here we go. We can answer this. So I'm going to use American Water Works as an example. So I see they have negative cash flows. Let's oh my gosh, I have too many freaking tabs. Good thing I have a lot of RAM. Because otherwise it'd just be destroying me right now. I still haven't closed it from Warner Bros. Discovery, so it's like getting nuts. All right, nuts. Get out of here. 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 I don't care about you anymore. I'm done with you. We'll keep you. All right. Anyways, American Water Works.
Browser punishment mindset.
Yeah, capital browser punishment mindset. The name is getting longer and longer and longer. All right, so cookie options. I'll just understand. I understand about cookies. I understand cookies are delicious and tasty. So we're going to go to investors. Where are you at? Where are you at? Where are you at? Am I blind? Oh, investor relations. I am blind. Okay, so SEC filings. Give me filings. 10Q. I don't want the 10Q this time. I want the 10K. Give me the 10K. Give me. Dun, dun, dun. All right, where's the filings? I just want your filings. View all events, view all presentations, eyes, view all news.
Just hit
here we go.
View all financial reports.
Got it here. All forms, annual filings, 10K. Oh, PDF. Give me PDF. Give me the sweet PDF. Okay, so financial statements, supplementary data. We shall go here. Just scroll down. Go down. Oh, a little higher. No, it's operating revenues. I think the balance sheet's first. There it is. All right, so wait, what? Actually, no, that's not what I wanted. I forgot what I wanted in mid-search. I want to find the income statement. All right, here we go. All right, so, and then we're going to go to statement of cash flows. So net income, all the way through. You see a lot of depreciation, amortization, but their biggest expense always is going to be operation and maintenance because they're utility. So that's pretty normal. And then let's go to the cash flow statement to answer this man's question, because this is why. Where's the statement of cash flows? Oh, no, it's below. Yeah, here we go. Okay, so every single year, this is what he's talking about, that every single year we do see net cash used net cash provided by operating activities is 1.41, but what do we see there? Capital expenditures is sitting at 1.764. Now, the thing is, there is the maintenance level of CapEx, and then there's the CapEx they use to grow included in that. So that's all CapEx, all lumped into one. So that's actually to kind of basically answer your question. But just because it does have, negative cash flows in that sense, it doesn't mean actually that it's necessarily a bad thing, because the CapEx investment that it's making this year, it's rolling into a debt agreement of some sort because it's borrowing money or it's issuing shares. And then that investment is ideally, you think of it as it's going to generate cash flows in the future that are going to be greater than the expense incurred today in that CapEx. So usually they have a bunch of CapEx all at once, right? They consistently have a ton of CapEx is what you're going to see. So in these instances, you actually want to pay attention to, in the accrual basis of accounting, the net income. The net income will actually be pretty telling because they're always going to be very CapEx intensive utilities. So hopefully that kind of answers you. Are you guys actually, are you guys bringing us into everything money? I'm seeing a couple comments. What is the price to believe ratio? So the price to believe ratio is something I will actually work on for jokes, but it will take sentiment data and divide price by the sentiment data. So it's price to believe ratio. That's how we're going to calculate it. Nintendo. What do I say about Nintendo, Austin?
Oh boy.
You can say it. You can use colorful language.
Try to let me try to put this into a respectable language. People who buy Nintendo enjoy having Nintendo reach into their wallet and steal their money.
Yeah, so it's a great company.
Yeah.
It's a company I'd want to own.
Nintendo equals great company.
Yeah, Nintendo. So there's only two companies I believe in this world that can really get away with certain behaviors. Can you plug Carrier into the model? Why not? Why not? What currency do you want analyzed in, by the way? Because I can do that. All right, analysts say it's a strong buy.
Flex.
Yeah, flexing. Flexing. All right, so Carrier's growth rates, what are they kind of averaging out, by the way? I'm just curious what the projections are, because I'm too lazy to make up my own. So I'm just going to see what projections basically are. All right, so it's pretty tamed growth rates. So let's actually just, I guess, bring it here. Let me zoom in to 125%. There we go. All right, so that's Carrier plugged in. Ignore all of this. By the way, this was for Rick. Let me just go back to Rick real quick. Rick real quick. Get it? Okay, so you'll see why in a second. Wait, we got to go back to, forgot. So check a look at that 20% growth rate. It comes out to $69. All right. Anyways, back to the task at hand. That's what I wanted to show you. And if you put 69%, it's 1,170. Anyways, enough with the jokes. All right, so let's see what Carrier Global kind of prints out. Carrier Global has a strong buy rating with a $49 price tag by analysts, indicating a 19.13% potential upside. Therefore, buy it right now because it's 41. Okay, so if I had to kind of guess on some analysis or some numbers that we could plug in, I just really don't know what to plug in right now, so I'm just going to do like 12-ish. Okay, so it's overvalued. Well, I mean, we're kind of doing a stupid margin of safety right now, and rates probably heading lower, so it's probably a little bit more aggressive right now if I looked in the back end. So 12, let's 10, 8, 87, no, 8, stuff like that. All right, so we get an idea for it. Okay, so just making sure we don't have like any visual anomalies right here. Shares outstanding has been pretty standard. Revenue has been pretty flat. Estimate actual decline. Okay, that's weird. Greystone said I sold it when Kramer came in and said to buy it. Is this Carrier? I hope my model agrees with Fabio. Yeah, this is Carrier right now. It's not that it agrees with me right now. It's I'd have to actually see what projections I'd have to be plugging in because I'm kind of just going in blind. I'm just taking, I mean, maybe your margin of safety might be a little bit less than that. So, yeah, because I really don't know what we'd really be plugging in right now. Oh, that's probably something. Yeah, that's probably something here. So you see, this is right where we are now, and that's where analysts are actually projecting us to be because there's something going on. So yeah, if let me see, do I have, I got rid of it. I'm so stupid. Why did I get rid of it? I should always have that here in front. I mean, I can just go here and find out. Yeah. So there's something that we're gonna have to adjust for. Okay, so that's not really the thing that we need to adjust for. So in that case, because we're gonna go off of the estimations and make the adjustment, I'm gonna bring up in the 1 year and kind of bring it up to the estimates of analysts, basically from there. So I'm going to say, I'm going to meet them halfway, basically. I'm going to say they're going to achieve around there. And I have to say yes. Okay. So here we go. So that's going now off of this estimation, kind of just meeting them halfway. Again, I'd have to really look into it, but we're just doing like a quick glance. Okay, so let's see here. I saw the estimations going anywhere from like 5. I saw 12, 8, 10. Yeah, that's fine. And let's picture, I don't know, like a 7. Okay, and then let's increase our margin of safety here so we can get... Okay, so yeah, that's pretty much like... If I could probably see this thing at like a 38, and again, what I'd have to pay attention to is like, are these analyst estimates, like what are they penciling in here? Is there some weird anomaly going on here in this estimation, or is this actually the case? Because it does appear that it has been basically kind of flat, but probably they're recognizing a lot of cash in the coming future, and analysts are kind of pointing to that. But yeah, TX. What is TX again? I forgot what TX is. Triniums, I say. Okay, it's a manufacturer, long steel products, Argentina, Brazil. Oh, okay, so this is a different country. Well, it's headquartered in Luxembourg, but its operations are all over the world.
Weird.
Yeah, no, Luxembourg is a really good place to actually incorporate, by the way.
It is. Yeah.
It's really good.
Luxembourg's
a great place.
Yeah, everything. Well, I have a decently sized position in the speculative side of the portfolio. Austin knows which one it is. That is headquartered in Luxembourg as well. You know which one it is, Austin, don't you? Okay, so let's see here. So I saw 8% growth EBIT for a car. Yeah, that's what I'm kind of saying with the 8%. That's kind of like the middle ground. So I'm going high about 4% and then down to like 5%, so down 3%. Maybe I just change that to like the 4% on the low end. Kind of make that 8% a middle point, but yeah, I don't really know what the high end would be, the low end would be. And then you see here that the model's not liking it too much, and it's actually recommending a negative 11.85% allocation because of the probabilities right now that's being assigned. So it's not liking it. So if you think that these are the high probable scenarios, it's not liking it right now. Okay, right now. Okay, so you see, like, Dan, you're in a different position because this is the question whether or not I'd be like, is the same risk reward available or applicable now? So your price allocation is pretty good. So if you were buying in the 30s, that's basically the scenarios that you're pretty much looking at. So you're doing pretty good. This stream has been way better than the stuff you've been doing. Oh, you think so, Cole? Like, unironically? Or he's making fun of me now?
I can never take Cole at face value. It's just not possible.
Honestly, I really can't either. Possible. Yeah.
Cole, you hear that?
Anything he says, he usually has a implicit, subtle, subliminal message inside of it. So if you read his message 3 times, and even then, you still won't get what he's saying to you.
Yeah.
Great guy though. Hilarious.
They like you.
Always has some good input.
Yeah.
Oh yeah, you see, Cole has admin powers now. I forgot he still has those powers.
Yeah. Skylar, we talked about WBD at the
very beginning
of the stream. Yeah.
Yeah. The very beginning.
Went into it like pretty extensively too. Like we were covering like IP,
the debt
and stuff.
Yeah. We talked about the debt structure. So yeah, go check it out in the beginning of the stream, definitely, if you're interested. Now, yeah, so you were buying Carrier in the mid-30s. Okay, so I'm answering the question, how do we analyze a company like TX? So if they're commodities-based business, where did I put this? Oh my gosh. All right. So they produce what? Manufacture flat and long steel products. Okay, so let me actually go into their website. I mean, you're giving me one of the hard guys, by the way. Definitely like not my forte, I'll tell you that. So grow your business with Trinium. What do you mean grow my business? What do you mean? What am I doing? I guess that's definitely not meant for me.
You don't trust that guy in a suit, man? Come on.
No, I just don't know
a suit.
They sell steel products. So this is like Nucor or something, but they do like the final touches. What is it that they're doing here? Okay, so Turner, Brazil, the company has an annual production capacity of 24 million tons. It takes the name of a Latin word, terror, and any reference to. Yeah. Okay, so it's steel mills. Okay, so it's a steel mill. That's all it pretty much is. Be real, man. Anyone who would be upset if you were in his position. Huh? What's that? Grab just boys?
Well, I think he was responding to use of Sharingan, their comment or something.
Oh. Yeah, I don't know why he was so angry at coal. To answer that, but anyways, we're not discussing that stuff this stream. No, I refuse unless everyone forces me to. With super, I'm kidding. But anyway, seriously.
When I logged off when he was talking about how he's like, oh, I filmed 6 videos a day, all this stuff.
Oh, you logged off? You were like...
Yeah, well, I was like, I need to get some sleep, man. I mean, today we had all this stuff to do.
Did you see how much... You know, this is like fake energy that you're seeing right now? This is like, I tell myself I have energy to do this. And I'm just like... Yeah, like just slapping myself.
I think the light setup helps though, because it
does.
It's daytime type of thing. You know what I mean?
Definitely. Yeah.
100% it does.
My room is super dark right now, so I'm just chilling here, like, yo.
I can tell by the voices you guys are losing energy slowly. But yeah, commodity related business, I really believe you need to be an expert. Yeah, I think that too. But people ask me anyways. I'm just like, and I always tell them the same thing. I'm just like, bros, unless it's like, so like. Some of them you can get better than others, but some of them are pretty niche, I gotta say. So yeah, like this one's gonna be like pretty niche. I agree with Andrew Marshall with this. What is this, man? I'm still finding new companies through. Well, that's the whole goal, I guess, of Capital Mindset. There's a lot of companies I do want to. Oh, let's do this. There's a company I'm gonna bring everyone to. Look at this excitement, and Austin just yawned. Austin, you better suck in that yawn right now. It's only 11:44. You're too young. It's 11:44.
Bro, don't hit me with this. It's almost midnight.
Yeah,
any normal person would be asleep right now.
No, but you're not. Especially you're working in public accounting. You have busy season in tax. Like, come on. You're gonna be in the office or home or whatever on the computer for a long time. All right, so let me think.
I'll drink some coffee then if I have to.
And then you gotta study for CPA as well.
Yeah. When are you gonna do that? Boy,
I have been doing.
We're calling you out live.
I have been studying the CPA.
That sounds like
what section you on, bud? What section?
This man's gonna bully you.
F2. Oh no.
All right, we should analyze a bank too. Okay, I was gonna analyze a different company, but yeah, we can analyze a bank. So, pick a bank. Any bank. Pick a bank. Any bank.
Wachovia.
What the fuck? Why? No, I don't want that bank.
I don't know.
Pick a different bank. Any bank.
Credit One.
No. I don't want that bank either.
PNC.
Maybe. All right. Everyone's picking different banks. All right. Oh, PNC. Oh, you guys thought the same thing. All right. I'll go over a couple of them. How about that? So I'll go.
I didn't want to pick the big ones.
You didn't want to pick the big ones? Why? Well, you picked a regional. I mean, it's pretty big.
Because they're all. Because I don't know. You look at them. Somebody said Goldman Sachs.
Oh, Goldman Sachs is trash. I'm kidding. It's not trash. But Goldman Sachs actually is a lower quality book bank. It's not a bad bank. It's just a lower quality book bank. Like they're.
Jeez, bro! Holy moly!
What happened?
But I mean, that's. I mean, the return.
Oh, that's not that much. Yeah, it's not that much. Over this time period.
But that's over. Yeah, over that time period, that's pretty. Pretty understandable.
Oh my gosh. I'm sorry.
Like a dino. Oh man.
No. Do you see that? I'm saying this. So someone is super chatting me to talk about it. Even my Sharingan couldn't have seen why he was so mad. Yeah.
What is he talking about?
He's talking about the everything Mooney.
Oh.
Everything Mooney. Yeah, I don't either. All right, but looking at PNC, so PNC is a regional operator. I like this bank overall. I'll just tell you straight up from the get-go, but it's not going to be like my favorite bank. I'll tell you that right now, but it'll be fine. So let's actually see.
We already know what your favorite bank is. So
what's my favorite bank? See if you know me.
Man, we all know.
What's my favorite bank?
Well, you love B of A, man.
I love B of A. Yeah.
You should have memed it, Noam. You should have memed it. Should have been like Bank of North America.
Bank of North America.
No, it's Bank of the Americas.
Yeah, right.
What do they have? Okay, I'm just gonna go PNC Investor Relations because they probably have it disconnected for whatever reason.
Everything for money.
Everything for money. Wow, that's a good name. You guys come up with the best names, I swear to God. Like, you guys came up with Joseph Bubbleson. Everything for money.
So wait,
that's actually fitting.
Mindset.
But if we saw the dino pattern on this one, where's the Zuck?
Well, not all of them have the Zuck. The Zucks are the ones you want to be involved with, because those ones for sure have an either up or down scenario. Either up or down, 50-50. Okay, so let's go to... because I actually think that's actually like a fantastic name. Everything for money. That's like super well thought out. All right. PNC has a cool music venue in Charlotte I went a lot to. Therefore, to buy, by the way. But let's see this. I just got to the live stream. Did you guys talk about LYB? We did talk about LYB. I think briefly. We talked about Dow, LYB, and CE. So we did talk about some chemicals. I still like LYB, but I'm probably going to be adding Dow and CE just for some clarity. Just
for context, that's in like the middle of the stream right now. If you want to go back and watch that again, just kind of like go over it, like explain like why some of the price action's happening, etc.
I don't know if we got into the price action happening, but just quickly, it's basically a lot to do with aggregate fears of aggregate demand collapsing. Not collapsing, that's a strong word, but falling down. I suck at multitasking in my mind. You see, like I was trying to talk and then I just stopped making sense for a little bit. All right, so we can go with quarterly filings, but I want to find the annual. Give me the annual. Next. See, I hate this because if I just put 10K in here, should it be fine? Oh, it's annoying. Oh, no. You kidding me, Julius? You're joking with me, right? There it is. Is it serious? Oh, you see this, Noam?
Yeah, I saw what he said.
It's gonna be BS. But don't you only have to liquidate if you're doing it?
Yeah, if you're doing it or you're, at the level.
Yeah. So if you had a certain level or you're actually doing it, because I think if you just can't sell it for that period while they're doing it.
No, you can't hold it either.
No. I'm saying if you're not doing it.
Oh, if you're not doing it?
Yeah, if you're not doing it. There's still like rules, like you just can't sell it.
Nah, I mean, I believe if you're not doing it, you can still trade. I mean, obviously, that's you wouldn't really have that information anyway.
Yeah. Okay. Yeah. That's why.
Because you don't get access to files unless you are on those projects.
Yeah. I mean, that makes sense. Not delve too much into that. All right. So,
thanks for the heads up, Julius.
Yeah, thanks for the heads up. We really need to insider info ? And if you're signed to it, otherwise public accounts have to before be able to hold. Yeah, I just remember KP's rules. So compared to actual guidance. Okay, good. Yeah. Thanks for letting us know. All right, so I'll just buy a stupid amount of the shares now and just hold to the point where they're just like somehow I just like acquire 10% of the company. Just like what is going on here? Cole fell asleep again.
Oh yeah, that's a good one. I don't think he did, but I think he just
left
analyzing. Oh, he did leave?
No, you're saying Cole, not Austin. Austin,
yeah,
did you fall asleep?
No.
I'm like reading something, and I'm actually like reading it. I'm focusing on it.
Oh, okay, good. Yeah. So I'm just looking at this investment in securities, loans. So their books have grown drastically. I mean, that's not to be surprised too much. In the wake of Wells Fargo, there was a lot of opportunity for some banks to swallow up Wells Fargo's former business because Wells Fargo was capped on their growth. So deposits, because that's growing nicely. Borrowed funds. So, by the way, people like to think that banks care about inflation. They only care about inflation necessarily from the operational aspect of the business. Like operational expenses can rise, but as far as their loan book goes, they don't necessarily care because it's not their money, because they are like the creators of money. But yeah. That's neither here nor there. I can get into it. People ask. Call option on CE. Yeah, call options. Let's go. All right, so residential real estate. So this is the breakdown of the loans. And so I always like to look at this to see what their exposure is. And they have it break down. Well, I wish they had a percentage, but you can always just calculate percentage. It's really not a big deal. So in terms of total loans, we have commercial and consumer loans. So consumer loans, we have residential real estate. So you would basically take this number, divide it by this, and you find out what the percentage is. There's a huge growth in the residential real estate. So, of course, we can kind of think or decipher why that is. A lot of people refinancing their homes, and banks will like to buy up these securities and these loans and hold them to maturity. In some cases, maybe not, maybe yes. But they want to build out their asset base in whatever asset class they really desire. But in this case, we did see a massive focus, it seems, from PNC to buy up some residential real estate loans. Home equity loans did actually decline, and automobile loans grew. Okay, this is my least favorite. You guys know that. Ally Bank, that's their largest thing. There's actually another financial institution that has it even bigger. I always forget their name. They've probably been a good short. Austin for you, Fabio. Austin, what up? How you doing?
Oh, what's up? Yeah, good. I know. I'm like, hold on. I'm like,
no.
Something.
Yeah. I'm not talking to you.
My gosh, it was perfect.
That was
I
great.
knew that was gonna happen.
That was
I knew
great.
that was gonna happen.
That was so good. Oh my god. Austin goes, "What up?" What's up? I'm reading.
I'm in the middle of reading something. Hold on.
There's two Austins.
Austin Square up in the house.
Yeah, that's funny. All right, so they have education loans. So that's probably like student loans, credit cards. So they have a very small credit card book, relative
And
to like.
Discover's always trying to give me loans. It's ridiculous. I get a new piece of mail like every week from them, trying to get me to get some student loans.
So I see what just taking out that student loans, take out infinite ones, get the forgiveness from Beaton.
Yeah, I already took out $100,000 of them, so it's all good.
He's joking, guys, by the way. You gotta tell him that you're joking, Noam. Otherwise, they're gonna actually like think.
I don't.
Wait, frat boy finance is returning. Yo, bro, I took out $100K in student loans and I put it in Cardano. I'm investing in my future. All right, so
the moon, man.
Let's see here. So this is actually something that kind of coincides with a lot of stuff we've been talking about on the channel. So take a look at this sheet right here. So this actually breaks down their loan book in terms of investment securities. So they have U.S. Treasury and government agency securities, and they have agency residential mortgage-backed securities. So look at the size differences there. So we do have an amortized cost, fair value cost for 2021, and then you see it versus 2020. And then you can see the growth rates. What do you notice about the growth rates? Anyone want to pitch in? Anyone want to pitch in? Anyone? Noam.
C word. Sorry, I'm like. Exactly. What are you...
Oh, right here. Just focusing on the line items of U.S. Treasury government agencies and the agency residential mortgage-backed securities. So mortgage-backed securities is the largest portion of the bank's loans or investment securities. But take a look at the top line item. What do you notice about it? So the difference between them is what I'm pointing out is the growth rates. So there has been a massive inflow into U.S. Treasuries and government agency securities from this bank, even though this company's not a primary dealer. So keep that in mind. Pretty good. All right, so basically these guys.
Yeah, no, I see what you mean. Yeah, they doubled,
Yeah, so these guys are. I mean, it's a pretty good, honestly, for what they're holding. It's not bad. I mean, some of the stuff is not going to be. This is obviously not toxic. This is debatably, but they're holding in 100% AAA actually. But
Yeah,
so
I was gonna say, but they're all AAA or AA. So.
But it's not near ever going to be like technically the quality. Like you can use a lot of those to settle transactions. So it's a little bit different. But anyways, agency
with lower ratings essentially.
Yeah. Agency commercial mortgage-backed securities. So this is their commercial mortgage-backed securities, residential mortgage-backed securities. So they still have some, and they could be buying these from, again, you can have like, for example, Rocket Mortgage, UWMC. They create the loans and then they sell the loans. So then these guys will buy the loans, hold them on, and basically generate that extra interest. But yep. Okay, so yeah, not gonna lie, I'm hella dumb at analyzing banks unless it's roasting SoFi. Well, we can talk about SoFi too, but okay, so then there's deposits, non-interest bearing deposits. Funny enough that those are things now. And then interest bearing deposits, you have money markets, demand, savings, and you can see that, well, they're probably not going to be generated. These are all liabilities at the end of the day, but this is their funding source or their source of funding. And then this is where they will take this money, take on leverage on this money, and then go out and buy other assets and generate fees on those assets or interest on those assets. Okay, so let's see here. Anything else that we want to kind of go over? Income statement. Oh, stop it. All right, there we go. Net interest income, so about 6.2 billion. So rates have been rising, but that's not always like a good thing, okay, for banks, not always. Total revenue has risen, okay, nicely. But I think they're, in terms of I want to see their expenses, but let's look at down here. So they have the breakdown of loans, so average balance sheet, loans held for sale. Okay, so these are the ones that are held for sale here. It's not many, so most of them are still classified as held to maturity. And so we have the consumer breakdown, commercial breakdown. Okay. They gave us the performance ratios here. So non-interest income, total revenue, efficiency. No, not the ones I really care about. Consumer service. ATMs, branches. I don't really care about any of that too much. Yeah, so you guys are I guess, appreciating banks, right? Banks are boring. I want to hear a raise of hands. Banks are boring.
I think banks are cool.
You think banks? I think banks
complex.
are cool.
I mean, yeah, they're kind of cool, but
they're kind of cool.
They're complex, definitely, with their accounting. Hence the if you're put on, a bank as a client per se,
you're a Chad.
It's definitely more complex.
You spend the whole year on them. You spend the whole year on them. Asset management over banks. Banks are okay unless they are DB or worse. Banks are cool but hella boring. How you get a paycheck 2 days early even become popular? Are people really that dumb? Okay, so that's talking about SoFi. So let's talk about SoFi. So SoFi.
What's interesting though is there's a lot of companies jumping into that, short-term loan type of thing.
Well, I mean, if you want something and I can provide it and make money off of it, why would I not do it?
No, I mean, for sure. But at the same time, it's just, I don't understand how people are, they're just like, oh yeah, 2 days before. Yeah, totally.
I'm curious. How much would they offer me if I go in personal loans? Let me get a personal loan. I'm gonna buy some Cardano. Oh my God. Fuck that. Oh, wait.
8%?
Will you give me 100K? I will do the responsible thing. I'll borrow 100K and just plow it into MPW. That's the most responsible thing I can think of right now. If it's fixed. Oh, it's fixed. Oh, what is this? No, but there's probably a lot of stipulations like you can't do. It's a fixed rate of 8%. That's interesting. Oh gosh, I'm just joking, guys. Where's Cole? Cole got into a fight.
Hey, there's no fees though. There's no fees.
There's no fees?
Yeah, so it's a no hidden fees.
Oh my gosh, Dan.
Scroll down. Or yeah, it says it there, but it also
right
says
here.
Further down.
This one?
Yeah, it says no origination fee, no prepayment fees, no shady.
Ooh, they use that word.
Ooh, those shady fees though. They're gonna get you.
Yeah, so he's making some good points here because if you get your paycheck early every month, it's no different. Fabio, that's messed up. ... You should put it into Bitcoin. Yeah, that's honestly what I should do. I should borrow it. Be like Michael Saylor, but with Capital Mindset Holdings. And then just like Capital Mindset Holdings is just a Bitcoin holding company. and then I just become a billionaire, and all of you can just suck it, because I was while I was preaching responsible stuff, I was really making my real money through Bitcoin and just like doing stuff with Bitcoin. Someone is doing that on Wall Street Bets. Oh my God. Crypto and short your marriage. LOL. SoFi is saying if you are a customer, you are going long crypto and short your marriage. Oh my gosh. They have wedding loans. Okay. I have a question for anyone in the chat. I won't judge you, but has anyone in here gotten a wedding loan?
Oh my gosh. Dude. Look at that
Wedding
interest rate.
Has anyone here gotten a wedding loan? Please. I just want to know this.
20. Almost
I just want to know. Have you borrowed 100,000 for your wedding? Or whatever it is. Is this like a very common thing? I actually want to know this. Oh, bruh, do you know he got kicked out of the company, right? Bacon Meme says not married, so no. 23%, WTF. I could use that wedding loan to hire...
Oh my gosh. Oh, Andrew said he knows people who did.
Oh my God. Master Doctor, you should have seen him on the Discord call, because he was just like this angry penguin every time he talked. So I had it set to like only the person talking would show up. So every time he kept screaming because he was pissed, it's just this penguin popped up on my screen and was just glowing, just going just screaming. It was the funniest thing. I loved it. So Andrew's saying, I know several people who did. Oh my gosh. Yeah. My assistant controller got a 20K wedding loan. Okay, but assistant controller, I mean, maybe he's making, enough to like pay for that, I guess. But man, I don't know. Maybe, just borrow 100K for a wedding. Would you guys do that? 100K for a wedding? I already know the answer. Why am I asking? I'm fishing.
I don't think that's a tough question.
All right, so like I always look at this.
No, I do know someone who literally I was at a wedding, and it was a good family friend of ours, and they spent 50K on their wedding, so
50K.
Yeah, but they paid it off, so it didn't matter. But it's like insanity.
Yeah, I mean, look at that. So get up to pay 2 days early, pay with no account fees or overdraft fees, and cash in up to $300 when you sign up and get direct deposit. I think I said I might, dude. I actually might just do this for the just for the thing. All right. So how much do I do it? Total qualifying direct deposit.
Right, bro, I'm back. Finished my reading. What's up?
It's like we were talking about something. You're like, all right, bro, I'm back.
I know.
Did somebody say banking? Oh, that's right. By the way, investing with Cole is an investment banker.
That's Chad.
I just got quiet. All right, so did somebody say banking? Yes, we did. 60K is 60K. MPC Austin is back. Yes, he is back. Crickets. He's not. Cap.
I love it.
USAA is such a superior internet-only bank into all these types of things. Yeah, wait. USAA, I'm kind of ignorant of this, and this is going to sound silly. Don't you have to... Do they offer services to everyone?
No, they don't. You have to be a veteran. It's funny because like I got like Navy Federal mail. I have no idea why they're like sending me mail. I have no family in any of the, that have been in any of the, services or whatever you call it.
Do you? So okay, we're military. Huh. Interesting. So you guys are really happy with this? Ally Bank. Ally is the best bank, capital mindset. Cole, you should go work for Ally Bank. You literally love them so much. Just literally go work for Ally Bank. So you're inspired every day, and you can get stock options in the company, and you can be very happy and just accumulate over time. How about that? Sorry, not credit loan, but credit union. So Yeah. So they're a credit union. So do you guys actually really like your services here? I mean, they're probably pretty Chad. Let me see. How much interest do you get? Open an account with 10,000 or more. All right, so let's see. Show me the rates. Wait, this is like, guys. Wait, what are you talking about? Where's the? Oh my gosh! Look what he mentioned. Do you guys see this? Wait till you guys see this.
What?
Look at him. Look at the mention. You guys remember that stuff?
Oh.
Nuketown, Black Ops 2.
Jeez.
Oh yeah. Guys. Oh, we should start. We should do a clan on Ready or Not. If anyone has Ready or Not.
That's what I'm saying, bro.
That's what I'm saying.
Call it Kager, the CAGR clan.
The CAGR clan. Oh my gosh. Yeah.
No, we should call it Karin Big.
Karin Big. Oh my gosh. Freaking CPA terms. Guys, join Kager. No, yeah. I feel like the guys with like actual military experience like would play, and they'd be like, "You guys are fucking tards!" Like just like running into a room. The way we'll clear a room, they'd be like, "No, you're doing it wrong. It's this way." Austin's just like runs to the front, ignores all safety, just like bashes into the door with the battering ram.
No, he'll just
hey, I actually played that game pretty intelligently. I don't NPC and just Rambo into doors.
Oh no, Dan Weston. No, I know you got to serve to join USAA, but I'm saying like, the whatchamacallit, or I think you're probably watching behind us then. But yeah. No, we're not making fun of Airsoft. No, we're actually talking about a game. So, they don't use Xbox 360 controllers for bomb disposal robots. Calvin reminds that they would respect gamers. He is saying he is a camper, angry penguin. Oh yeah, you guys are funny. All right, so because like I'm looking at, I don't know, I might actually like just check out SoFi, just see what's up. And I think there was something with like their credit card they were offering. Where is it? Investing. They don't. The thing is, they don't sell or they don't allow options yet, so I can't sell contracts. So there's no incentive for me to have like a decent amount with them. And there's no incentive period because it's like I don't get anything extra for having more with them. So it's like okay. I heard short SoFi. Gotcha, bro. Okay, be careful. Let's see here. What is this? Wait, what does this say? Invest and pay down debt. What? Super for the high net worth. That's definitely the thesis there. And fill basic numbers. Shop. Okay, whatever. I want to see like. Will lower your APR by 1%. 3 cash back on all purchases. What? Huh. Oh, up to. Yeah, whoa. What is this? Up to 3%? I mean, that's very competitive if it's on everything. But you have to convert it to crypto? Bro, what is this? Do you see this? Get up to. But, like, what do you mean up to? Oh, wait. Let's see. Apply, get approved for your credit card, and set up a direct deposit to boost your cash back to 3% for... Oh, okay. For 365 days. Okay, so it's for a year. And then they cap you at 3. Oh, that sucks. They changed it because it was much better before. They were offering like $400 for like 1,000 spend, but it was $400. You spend 1,000, and I think you deposited like 1,000 in the account. So that was like the best offer they had. This is terrible compared to that. So it's just basically it's just standard.
But it's only on Olive Garden apparently for according to Daniel.
What? No, there's no way. It's no way. It's
You can only get 3%. But it's only on Olive Garden.
That's true. That's so funny. There's no way.
Dude, you don't see it in the fine print?
No, that'd be hilarious. It's like you can get 3% only on Olive Garden.
But it's in the fine print, man. Like, what are you gonna do?
Here's one that I actually like.
What am I gonna do?
What are you gonna do? Did they do a stock split? What the heck? Yeah, they 100% did a stock split. There's no way. I didn't see them do a stock split. I don't remember them doing a stock split, but this is one that kind of just escaped me. I was literally wanting to buy it around here, and I never pulled the trigger. I never pulled the trigger, and I look back and I'm like, gosh darn it. I think it
You know
literally
what I have to
was
say
here.
about that?
What?
You know what I have to say?
Yeah, tell me.
What a loser.
Oh no, 100%. I was literally in a cabin because it was November 2020. I was in a cabin and I was like thinking, I'm gonna buy it, and I never pulled the trigger. Just missed out.
Oof.
It was a solid cybersecurity play. I mean, what really happened was multiple expansion, but yeah, back then it wasn't that expensive.
The only thing that you can say though is, what do you held it that long though? You know what I mean?
Yeah. Oh, by the way, I know net is Cloudflare. I know most tickers now, but there's some that will catch me off. But I know net is Cloudflare, and CrowdStrike is CRWD. And then there's also like Fastly, which is now like the ugly stepchild in this industry. Look at that. They're down to $11, man. Down to $11. I'll start an ETF. You guys can buy it. The innovation ETF. It's gonna be like competitor ARCs. I'll just put in like Fastly, Alteryx, like just a bunch of SaaS companies, and it just all goes to zero. USAA was 30% more than Geico for car and house, but I like the peace of mind of them being one of the best insurance companies in the United States. Well, whoa, damn, wait. I don't understand what that. Wait, what does that mean? It's the best? You mean like the most secure? Isn't like Geico part of like Berkshire Hathaway? Okay, so Cloudflare is underrated. Might buy it honestly. Yeah, because Cloudflare, they do what Fastly does with the CDN networks. And they're also a pretty awesome cybersecurity company as well. Geez, okay, they're up 27% today. I can't in good conscience, no. Even though that's not the correct way to think about it, but I don't want to buy it now. Stupid. All right.
Stupid.
Yeah, so stupid. What's the Stanley Black & Decker? SWB or something? SWB? SWK?
SWB is Smith & Wesson.
Oh, yeah, that was a slip. Someone asked me about, can I check out Smith & Wesson and tell me if it's a good stock? So, Stanley Black & Decker, I mean...
SWK, yeah.
Look at this guy, man. Look at this guy. I mean, I did a video more recently talking about some of the risks associated with like the inventory levels.
CDP score is an A. Come on, man.
Oh, no, but that's bad. Remember, it has to be a B. A B is good.
Oh, that's right. B is good. Yeah, sorry.
Yeah, B is good. Oh, no. Sorry. A is good. A is good. So I'm so confused.
But this goes wrong. Oh man.
No.
We have to throw out the window now. Oh, no.
Yeah. Throw it all out the window.
Yep. Sorry, guys.
We disproved a theory. We disproved it once, therefore it doesn't work ever.
Yep, no, it doesn't work across the board.
But yeah, with Stanley Black & Decker, you're basically getting back down to these levels. So actually, I got to say, this deserves a deeper look where I'd probably maybe be interested in this. I don't know about you guys, but yeah. I mean, it is a cyclical business, and so it doesn't look that cheap, but it could be, again, because we're in a cyclical downtrend. Okay, so P ratio is above 15, therefore not a buy. Remember when someone did analysis like that, Austin?
Yeah, I do.
Have I analyzed ServiceNow? Not yet. ServiceNow, I mean, look at that. Look at that. 1,900% in just since 2012. 5 years. They recently actually went through like a little bit of a crash or dip. I remember that. I was talking about that the other day. Okay, so I mean, ServiceNow, Salesforce, all these guys. What do I have to say about them? I mean, solid company, price point. I don't know, but it is a solid company for sure. I know that some of you like to talk about Constellation Software. I don't know if you guys know about, again, this company. Roper Technologies. It's kind of like another Constellation Software-ish-esque, not really the same thing. But I know one of you really likes Constellation Software. No. You need to look at the 5-year P ratio. That's what real value investors do, so my opinion. Yeah, that's what we do. We just look at the historical 5-year average, and we're set to go. Can you look at Warner Bros. Discovery and Paramount? Well, we looked at Warner Bros. Discovery in the beginning of the video today, or live today. But yeah, Constellation Software is my largest holding and my oldest holding. Well, this one is an American Constellation Software. Not really. So I want to be careful saying that, but it's like super similar. It's not. It's not like exactly the same thing, but it's close. It's close. It's as close as I can find as an American equivalent. Help desk, COS like Zen are all going to see longer sales cycles, and CFOs are now going to question spend. Yeah, I was thinking that too. A lot of the B2B businesses, when we talked about them, that like there's going to be a lot of like a cost benefit analysis for a lot of these management teams. Like they're going to look at each individual use case and be like, is this worth it? Is this not worth it? So like I think AYX is one of the better data analytics platforms, like a low code one. And they've actually suffered a lot. I remember Kramer going like, this is a buy. And it was like around like here-ish, like something nuts. And now it's where it is. Yeah, so 40 was like its low point, and yeah, it's up 30%. But
that was a great impression.
That was a buy.
Have you? It is. That is a good impression. Yeah, Fabio, have you looked at Nintendo yet? Angry Penguin's saying.
Angry Penguin is angry if I don't look at Nintendo. He's gonna be like, "You mother f." Look at Nintendo. All right, so 5-year Nintendo's up 31%. Therefore, it's a terrible company because it underperformed the market. Dun dun dun. All right, so what do you misread it as? AYX is Arc'teryx. Okay. Excited, curious. Hello. So have you looked at Nintendo yet, Fabio? So let's actually take a look at Nintendo together. So we're gonna look at some Japanese. Dun dun dun. Let's keep it in Japanese. Let's try to navigate. Screw it.
Oh my.
All right. Where's the investor relations? This is a good game. We're gonna do this. We can do this.
Oh my.
It's this one. No, it's not this one. It's this one. No, it's not that one.
Why is it in Japanese?
You're not paying attention. I said we are going to listen to it in Japanese, or we're going to try to navigate the website in Japanese. We got to find the investor relations.
All right, go to the fourth column at the bottom there. No. Go back. Fourth column at the bottom there.
Fourth column at the bottom. This one.
Yeah. So and then at okay. So third column, go 3 lines down.
Wait, there's no third. There's no third column.
No. There's 5 columns there at like the bottom.
Oh, this one.
Yeah. So third column and then third line, like that like weird looking thing. Yeah. Oh yeah. Now we're actually making it somewhere. Okay. So now there's 8 bullet points. I'm thinking of a number. Choose what number I'm thinking of.
3.
All right. Pick the third one there. It says switch. So all right. So we already just pick it anyways and see what happens.
All right. So I clicked it. What do I do? Where am I?
All right. Oh all right. Hold on. There's kind of a delay right now, so I can't. English is the 9th pillar. That's funny.
Where am I? I don't know how to navigate.
All right. So there's a Q&A little magnifying glass. Type investor relations in that search bar.
But it's
and then search it. Type it. Type investor relations in the search bar and then click Q&A. And no. This is useless. This is useless. Hey man. Like, you're not going to find it there. Just type investor relations right there in that search bar.
I did. Do you not see it?
Oh, no. Yeah, oh, no, it didn't. The delay. It didn't come up with anything. All right. So we actually have to go back and start off at square one. This time we're going to the second column, the 5th line down. Because, like, usually...
Fifth line, there's 4 lines.
All right, the 4th line then.
There's only 4 lines. Is this it?
Hold on.
What am I looking at?
There's a stupid delay. I can't see anything.
Okay. Let me try now with the freaking share my screen. Oh, it's literally in Japanese. On Discord, it reads it in Japanese.
Oh, yes, I can see it now. All right, perfect. Back up, go back. Okay. Back up again. All right. So this. It says Amiibo, Nintendo Switch Amiibo. So this column is instantly just we don't need this.
Yeah.
All right. Next column. There's a bunch of weird characters. Nintendo Switch, a bunch of things. I see a 308, a Wii,
a Wii U,
blah,
yeah,
blah, blah.
3DS.
Right, okay, so investor relate. Ooh, actually, I might have just found it. All right, it's probably that global site thing all the way in the 5th column, bottom row.
This one?
See that? Oh yeah, look that. And then go to USA. Hey, it's in English. We've unlocked the 9th pillar. I love it.
No, I knew how to do it in English. Google was offering me to trade it in English.
All right. Back up. No. This is cheating.
That's what I'm saying.
Stop. All right, back up.
At least it has a Mario at the top there.
All right, so I think the investor relations is going to be 4th column.
4th column.
5 lines down.
Wait, this is the first one?
Yes, yeah.
1, 2, 3, 4, 5. I was here before, I think.
Are you sure? This looks new to me.
Yeah, I was here before. All right, so this one?
All right. No, because that's the 3DS one. Go to the
Someone said,
underneath.
"Is this how Jeremy sees financial statements?" It's just in Japanese. He doesn't even see the numbers. The numbers aren't universal. They're Japanese numbers. Oh my gosh.
It's just Jeremy sees. I love that. That's hilarious.
Dude, that's so funny. All right, seriously, how am I gonna get there?
All right. So now we need to employ something called luck. So what you're gonna do now? Yeah.
Oh wait, that might have been it.
Whoa! Holy shit!
Wait, yeah, this is it.
Yes, this is it. This is it.
Okay, yo, guys, I got it. I freaking got it. Yeah, it's right here.
Right after I said we have to employ something called
luck. Right after you say luck, bro. Yo. Okay. So these are the dates. All right. So again, we got numbers to work with because numbers are universal. So we got 8/3/2022. We got to see if we can survive in Japan, man. All right. So this looks like a PDF symbol. Oh God.
Oh baby.
Oh no.
Hey, we're doing this the authentic way.
Yes. All right, this is probably the income statement.
This looks like income statement.
This is Japanese for revenue my avenue at the very top up there. Okay.
All right. Yeah, that probably makes sense because we're looking at 2021.
Gross. Disgusting profit is probably that 119 number there.
Yeah. Gross profit.
Yeah. Yep. And then
different revenue line
income,
items. Yeah. Cost of
revenue
revenue
is probably at the bottom here.
Yeah.
So what we're seing is
someone said disgusting profit, gross profit. Someone said ban me. What? All right.
Did I literally hear disgusting profit? Angry Penguin is gonna roast me in the Discord.
He's just like pissed. Dude, we got this. So now let's look at the balance sheet. We got to find the balance sheet. Bro, this is insane.
I don't even know what these boxes mean.
I don't know what any of this... Dude, I'm not...
Oh, up there.
Wait, go back to the original page real quick.
Oh, the original page, this one?
I think this was... No, like the...
income statement?
Site.
Oh, no, found the balance sheet. This is the balance sheet.
This is it. Yep.
Yeah.
But, yeah, what do we want to see here?
I think I'm wrong. Never mind. You can go back.
All right.
I don't know. I'm trying. I don't know what I'm looking for, honestly.
Yeah. So this one, I'm pretty sure is the balance sheet.
All right. Cool. So apparently they're tracking deltas in the Japanese balance sheet, which is kind of Chad. I'm not gonna lie.
Wait, is this the?
I'd like to see a delta.
Oh gosh, no. This might be cash flow statement of cash flows. Yeah, this looks like
no. It isn't. See, it's
Wait, is it balancing out? Oh, okay, no, yeah, this is balancing out. Yeah. Oh, okay, good. So we found it. Okay, so we have cash. I'm guessing they're going from, if they follow a Japanese GAAP, and if it's anything similar, at least to the United, unless they're using IFRS. I don't know if they use IFRS.
Oh, they use Japanese. Well, actually, let me check.
Yeah, check.
Caesar saying that they use Japanese GAAP.
JGAP.
Yeah, JGAP.
Bruh says still more due diligence than. Hey, we're doing due diligence in another language. This is how it was back in the day, man. This is how it was back in the day. Yeah, back in the olden days. Remember that Japanese read from right to left? Oh my gosh, we're so stupidly ignorant. Look at that. But oh wait, they have the dates here, so we're good. So this is the new one. So this is up to date. This is the most recent one.
Best investors translate financial statements into Japanese, and if it's Japanese, then they translate out and then back into Japanese. Yes, it's true. That's literally what we did.
So then it should be pretty easy to recognize. Then these are liquid to least liquid, long-term assets, short-term liabilities. Okay, so basically what we can see here. Well, this is the statement. What are you laughing at?
JGAP, is that like baby gap but in Japan? No, somebody said Jap gap.
Oh my god!
Oh no, that's awful. Oh my goodness.
Oh man,
it's getting spicy.
Oh no.
All right, so we're looking at Nintendo. So basically, current assets went down. This is terrible. But in all seriousness, let's go back to the income statement. Where is it at? Or is this the statement? Yeah, this is the income statement.
Yeah.
All right, so more recently, so we did see gross profit did decline. Sales revenue, I bet you one of these is hardware and software. So it is declining.
Wait, hold on. Are we...
Hey, bruh, have you been keeping track of how many bruh moments? Because bruh is always pinnacle to every stream and every talk where he keeps track of the bruh moments. Oh my gosh. Oh my gosh.
I'm sorry.
That's the best. That's the best comment all day today. Like 15 bruh moments. Okay, so he's been keeping track.
Like 15.
Okay, so Nintendo. Nintendo. All right, so
Nintendo Myendo.
Yeah, Nintendo Myendo. All right, so NTDOY. We can actually put it up. NTDOY. Bum, 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 bum. Let's go. Let's go. All right, so I'd say with Nintendo, I mean, I'd have to take a real good look at it, but yeah. Don't insult the plumbing lifestyle. You can make a lot of money. Yeah, absolutely. I agree. Bruh, don't you have software to track how many each month? Yeah, that's true. Oh my, you're still going. You're a robot. I mean, I think every live stream I've done is always really long. I always think I'm going to go for a short time and I just go nuts. All right, but I think with that being said, we talked about a lot of stocks. I think it was pretty fun. Do you guys have fun?
Oh yeah. Oh yeah, it was a great live stream.
Oh yeah. All right. So with that being said, guys, thank you guys so much for watching here today. I'm glad if you guys had fun. Let me know by actually liking the video. If you liked the live stream, give it a like. Again, comment if you want to afterwards. I will be responding to as many comments as I possibly can. And it is 12:30 Eastern Standard Time. So it's a good stream. You guys liked it. So it was a dramaless stream. Back to the roots, so to speak. Back to the...
That was good.
Hey, no yawning on the camera, Austin. No yawning on the camera. You must give... You can't show weakness to the audience. The weakness... If the audience senses weakness, they will eat you.
It's true.
Like, you think Bacon Memes is your friend.
He will attack you. Eating mindset.
True. All right, guys. Thank you guys so much for watching. I will see you guys on the next one. And wait. How do I do this? I'm going to do this. It's going to be a trial.
We'll do it live.
Okay. Vegetables.
No. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks. Yeah.